What's up, y'all? How's everything? What's up? Is this music too loud? I didn't even check. Where's my phone at? Let me see. Hold on. Oh, this is loud. Jeez. All right, yeah, that works. That's pretty good. Like the sound of that. If you guys have any questions in particular in regards to the topics that's been covered, let me know. I was already asked two questions. One about hidden SMDs and one about fractals. Well, people have been asking about fractals for quite some time, so I'm gonna go over that as well. But if you guys have any other questions on any of the concepts that we go over, you just let me know, and I'll give you guys a hand. Wow, look at that. That's beautiful. 700 pips up. And if we look at our top down, you don't hear me? Oh my gosh. What is exactly happening? No, the mic is. What about now? Do you guys hear me now? I guess there's a little delay. It's really low. Let us see what we can do about this. And another one. Oh, it's fine now. Okay, great, great, great. Good, great, awesome guys. Welcome back to another stream. Wow, where are we within this? So we just ransacked these areas here above from our top down yesterday. Ransacked it straight up into this area here. If you look right here, there's a gap in here. That's where it's probably filling. You see that gap? So it opened up and gapped down heavy. And now you probably have it filling the gap up. It'll probably fill the gap and then continue back down to maybe fill the imbalance within here. Possibilities, but that's potentially why we are here. So there's a gap here. This 332 area looks like it's the middle of the gap. With gap fills, I don't necessarily know whether, because I don't play gap fills. In terms of like these gaps that are clear and evident on the chart, most people in stocks play these, but I don't know if it fills to the center and then falls, or if it fills the gap all the way and then continues back down. So we'll just learn a little bit about this area today and what exactly happens. So obviously we're bullish. Like, do we really need a top-down analysis? Yeah, we do. We always need a top-down analysis. Isn't the light mode blinding you? No, I got adjusted to it. A lot of people were having issues with the darker screen that I was using, like that. So I've just kept it on light mode since. And I had other things. This is god awful. This is the regular one that they usually set you up with. Let me see. This was my morning stream. I used to stream with these candles, these black and green candles, because bearish and bullish, it doesn't matter the candle. It matters about the move, not necessarily the color of the candle. So that's when I ended up changing the color, so I stopped paying attention to what was bearish and bullish. I had this area here, but people couldn't really see the crosshairs, and the white crosshairs against this background is absolutely horrible. So I ended up just going with this here because people were able to see this a little more. So yeah, no, I adjusted to it. I didn't like it. I prefer dark mode, but again, if this is how people learn, then I kind of just had to adjust to this. So let's look with, we have this whole gap within here. I didn't really notice this here. But yeah, there's this imbalance in between it as well. That has to be where price is tapping now or getting rejected out of, possibly. 1 hour imbalance up here. Oh no, this is higher than the imbalance. Yeah, this is a bit higher than the imbalance. Let me look on the 15-minute. Where are we? Right here. So where on the Lord's earth did I get this from? Oh, here. Okay, yeah, this is a 15-minute imbalance at this area, this 332 area. And that's only if you're counting to this candle here, from this candle to this candle above. Maybe if you're just using the actual candles, it could be here. I don't know. Let me look across to the left and see if it might have tapped just that lower portion of it. Yeah, it did. So is the imbalance between this candle here, which also makes it the gap. It's 50% of the gap candle that it looks like it's possibly getting rejected out of. I'm telling you guys, these areas is so important. So we came up, tapped into this gap. Where did we break structure though? Here and here. And nothing below here gave us that structural break. Nothing here, at least. Which you could have if we do trade higher. Sorry, guys. Which you could have if we do trade higher. Is a tap into whatever imbalance that could be left here. Let's see. Ali, what's up? How's everything? Try gray. You mean try a gray background? Let's see. Like whatever it is that helps for you guys, I don't mind. I don't know that. Does that look nice, guys? Maybe like a darker gray? I don't know. Chris, what's up? How's everything? Maybe darker? Or maybe in dark mode and then do it? This is god awful. Like this? Eh. Yeah, I don't know. It doesn't really look good. That's why it's just between this or the darker one, and most people, you know, they want to see the crosshairs. So lighter gray. Like this maybe, and then darken the crosshairs a little bit, and maybe take the grids out. Smoother background. You guys like this? Maybe with some black crosshairs. Like this, is this easier on you guys' eyes here? This could be a possibility. Let's see how it looks throughout the stream. If it gets annoying, I'll change it. And if I can't figure out the issue, I'm gonna request a manager. No, I'm kidding. All right, cool. All right, this is good. We have the consensus. Great. So there's this imbalance in here that this is where price tap. There's a tiny imbalance within this area here. Maybe we can just plop that line there. Right there, maybe, yeah. Yeah, there. So this came down, tapped into this imbalance here. Telling you guys, I'm gonna imbalance you guys to death. Oh my gosh. But it just makes sense because it works so well. I mean, look at this, the tap of this imbalance. If we weren't fooling around with the chart, we would have probably saw this. The tap of this imbalance to possibly this one up here. Maybe even a little higher to this. This is the last high. If price gets there, sometimes it doesn't. So let's see. We ran through here. It tapped into this area. So yeah, it could reject from here. And push further down, possibly. Then it'll look like this little this head and shoulders maybe. Maybe you have a test back into the area and then continue to fall out of the area to maybe whatever S&D is responsible or imbalance. So it could be like here, it could be here. You can get a little bounce up here to take you back up to maybe this area here. When price runs this low here, you could have a pull back up into that area and continue. Might find some support on the fractal, continue up. Another fractal, continue up. Imbalance, continue up. S&D blast off could be like something like that. But we'll see. Oh, so the people who was on my Zoom last night, they kind of understand where I placed this and why I'm doing this and why I'm expecting the rejection out of this, you know. And it could very well come to this area here still, mitigate this still. But this is the hidden S&D that I talk about. Usually it's a long wick that runs a low and then pushes up and takes out the high. So usually price sometimes will return back to this area before trading higher, because this area had the overall responsibility of pushing price up. Yeah. Oh, you just asked that. Yeah, how do you spot hidden SNDs? So yeah, that's it. That the wick comes down and then instantly goes up to break a high. So then this is manipulation. We ran this low here, or this looks like an equal low. Let me see. OHLC 252, and this is 253. So look, we just ran that low, just ran it by a pip, and pushed up, and we ran the high above too. So we could very well be coming back down to this area here to trade higher. I think this was the tap here though. So if you get a run of this high, you might get a pullback into this area and then a continuation above. Or maybe even down to this wick here. Oh yeah, like beep. So if it gets stuck at this S&D, then obviously you know it's the well, if it gets stuck up here, it'll be like the equal high looking to potentially run the low. I really wish I could listen to regular music on here in my playlist. I have such a fire playlist. I know you guys probably don't listen to EDM or you know, house. But that's like the new wave of music now. And like you see everybody's making it. Beyonce just came out with a song that was house music. Maybe this tapped into this imbalance here, this little sneaky guy. Let me see. Hold on real quick, guys. Oh no, you didn't. Haha, lucky. But yeah, you know, you see Beyonce just created a house album. I mean, a house song, or you know, EDM like song, and you know, that's where most of the people are shifting to, because again, if America is going into a recession, that means that there's not going to be, you know, any profitability with the people who are within this country. So now they have to branch out. What's the music and the genres that people listen to abroad who may not be affected by America's recession? Mainly house and EDM. So even with them, they're shifting and turning the landscapes of just like what their traditional music is to shift with the times. Not just the times, but where the money is. So they're essentially following the money. Maybe I could open this chart a little more for you guys. A little wider for you guys to see. I realize that it's really wide on my screen and sometimes it looks very small on the stream. So just, you know, let me know about that if that does happen. Rev taken off again? What exactly is Rev? Revlon. Oh, the hair company, the blow dryer company. Taking off, brother. We look bearish. I don't know what. We tapped into an area. I don't really like this area. We did get a double bottom on it, but I don't know if that's because, okay, better. But now we had this bounce here. We tapped up into the imbalance above. So this might be a rejection that runs the low. So you might want to be careful with that. Rev is Suriname. We have Kaseko and Kowina not touched by the West. We mean not touched by the West. Those little small lands off the coast. Would you wait for it to break structure, then get in, or would you wait for it to break structure below? So with We'll go back to this. So see, it's still at the rejection point. We just ran the low of it. So we could have a tuck back into this area. We could have like 15, 20 more minutes of consolidation sideways before potentially shorting. But yeah, this essentially, so look, we just ran this low right here. This smaller low just got hit. Sorry, bro, I'm talking about the music. Was a bit late. Oh, okay. I'm like, yeah, I can't recall what that was for. But yeah, okay, the music. So yeah, this looks like it's going bearish. We ran this low here after the top of this area. So now let me move this. Now we look to, so now we could potentially come up to this area and tap this SND, and we already tapped this one. Tap this one, rejected down here. We could potentially tap this one and then continue down, or we can just continue down from here. But this was the imbalance touch, this tap right here. Remember the imbalance to the left? I said that it wasn't tapped into as of yet from here. This was the touch. So now you want to watch and see what it does here, because if we end up flipping back up to the upside, we want to make sure that, you know, we're not going to take any of the highs. But this was just a tap on the, I should have actually put this price balloon here. Whatever. So yeah, look at this here. We just want to make sure it doesn't flip above here, because then it'll look like it's the double top coming out of the area to trade higher. But look at that imbalance tap, that's 23 pips up in one candle, just off of the tap of it. And now we short, and I don't have Rona, by the way, so it's just a cough. There was dust in my throat. I don't have it. Let me stop. So we have this imbalance here. Is it just targets if we're shorting? You're potentially shorting to some of these areas where you could expect a bounce up. But again, when we come below certain lows, we often get a cross of the low and then potentially a push up. So we want to watch that. Oh, but this was the low that I was saying. Look at that little candlestick formation that I talked to you guys about this year. And the thing is with this, oftentimes when you have price trade out, sometimes price just comes to test this area and then it'll continue short. Also, if you guys have any other tickers you want me to look at, I'll definitely look at it. But let me actually go back to this rev thing, because I realized that this guy is saying that it's going to $10. And I just want to see how far away or unlikely $10 is. So we put in the high, we have a low. So price is in this range right here. Oh, this was a gap right here. This area down here is a gap up. So price is within this range. Within this range, we have this hidden S&D that's here. We have this hidden S&D above. If we go to the 4 hour, so we put in this low, we failed to run this high or establish a new high, so we're running the low, which we just ran inside of there. If you guys look here, so we expect price to come back into the range of this. It taps into the range, and yeah, brother, I think this is bearish. I don't see anything working in the favor of bullishness. I mean, yeah, I think this is I think this is a gap fill. Filled the gap. We tapped on something in here. I think we said it was an imbalance, maybe. But the imbalance could just be, oh yeah, because it hit this imbalance too. So yeah, unless we're coming back to this area a second time, maybe $9, I would say, maybe. But I mean, it doesn't. I could be wrong, you know. It just doesn't give me any indication that we're going up. Not only that, let me see what area we hit here. Oh, actually, I should have did that on this time frame. I'm tripping. yeah, man. This hit a daily imbalance and rejected from it. Left imbalance to the bottom side, as well as this area that when it flipped up above. So you could have it come back to here. You could have it come back to there, potentially. I mean, that's I don't know. Maybe I would put that bad boy as something. Maybe this is news. Like maybe something happened. Somebody's buying them out or something. I don't know. But it looks, the move looks late if you're looking to buy. It looks like it's coming down. So yeah, that's what I have there, my man. So hopefully that helps. Good morning. Yo, Wagwan, my brother. What's up? It's my Jamaican brother over there. Khalif, how's everything? So look, you see we tapped. Well, I don't know what we tapped here, so let me not even make up anything. We tapped something in here from the lower time frame, more than likely. But we mentioned that we could possibly come back up to this area here. I should have actually put this here. So we have two unmitigated areas up there. And then we also have this area here with this imbalance. But if it goes above this, then we would be coming up to here. So I realized that there's not much latency anymore in terms of how long it takes between when I say something and when you guys hear it. It's not as much. I don't know what that particular change was for, but yeah, that was pretty awesome. Let's see, I have this here, but we already tapped into that. So now if we do come back up here, we could potentially be looking at either this or this. If we come up above here, we could be looking at a rejection within this region to come back down. But then this is also that V shape pattern that I tell you guys about, as well as this is still around the imbalance. This had one touch of the imbalance. This had the second touch. And then look, oh, I didn't even spot this. This is that little pattern that I tell you guys to look out for. You know, try to train your eyes to look out for like that. Because it's essentially, you know, then when you come down here, you go back up, tap into the area, and then leave. So this little pattern here is what I try to get you guys to like understand and learn. Because if you could learn that, look at, you see, this looks like an inverse head and shoulders. But if you look, it has rules. This high here is slightly above this high. So we put in this low, we put in this high, we put in another low, and then we ran the last high. So we tuck back into the range of the area, and then we leave. And that's exactly what just happened right here. And it happened on the imbalance. So that's prime for you to, you know, this could potentially even take this high when this happens on the imbalance. But we do, you see how we came up to this area here? I had mentioned we could potentially run up to this. And it looks like we might be taking the high now. Hey guys, by the way, I meant to mention that I do have a Telegram group that we currently have. You know, there are people who ask questions and stuff like that on the group, or there's just things that sometimes I post in here throughout the night, you know, throughout the morning. It's just, you know, us sharing knowledge and information on the things that we see, the setups we see, and we see whether they actually work out or not. But it's just sharing a bunch of information. So if you do join this group, you probably want to turn on the mute channel function or mute notifications function, because of the amount of notifications that come within this. We were killing the Asian session yesterday, actually. We were in a live Zoom. And we were just talking about like the flow of price and stuff. And we were back here. Like this is wait, this is not the Asian session. This is it's on the other chart. Back here, let me show you guys. Right here. We were down here just, you know, like hypothesizing everything. You see price taps into an imbalance, leaves, taps into an imbalance, leaves, taps into an imbalance, leaves. You see how powerful the imbalances are? And then we're also considering the structural areas that price runs and where it could dip back into between the range of the different areas that we have. So we had mentioned last night that we were coming back down to this area here. And this morning when I woke up, I actually saw it tap right into this area, give us the candlestick pattern we like to see. And like I said, price oftentimes come back to test that pattern, the bullish flip. You know, price comes back to test it, because you see it left this whole area here after it pushed away. There should have been like a little double bottom somewhere within here and then leave, but it's mitigating itself as it's leaving if it's not going to come back. But because you had this double bottom and then this push right away, we had the area tap back into it. And this is why I say I taught this secret to some of these guys yesterday, but to you guys even as well. You know, like I told you guys, take a double bottom, a double top. Don't care about the wicks that are there, because the wicks are just manipulation. Place a square around it and watch price come back to the center of the area and leave. Look at this. This is another double top up here. But this is actually where the double top is. Look at how price comes back to the center of it and leaves. Oh, but this is a double bottom here. Look at how price trades above it, comes back to the center of it and leave. So that's sauce that I was showing some of these guys yesterday. But, you know, like we do this, you know, all the time. We talk about this. We try to like just hypothesize different things that price does and how we could kind of get better at, you know, trading. And, you know, we come up with some pretty neat stuff. You know, we got some other guys who have some amazing techniques as well. Some guys who stay up late, night owls, you know. But look, you get, this is what I'm talking about with this. Let me just show you guys this. I get real excited when I see this. Look at how within your area of entry, you get the candlestick pattern of this. But if you zoom out, look at how within this area, the structural pattern follows it. Let me move this here too. And this. If you guys look, the structural pattern follows it as well. So it's not just the candlestick pattern in there. The structural pattern follows it. And when the structural pattern follows it, then overall you may see like higher highs put in because the structural pattern is stronger than the candlestick pattern. So the candlestick pattern is what I use when I'm at my areas where I want to enter. So I'd be using this because we hit this S&D back here. This area here, I had circled this area for them last night. And I said this area is responsible for the break of structure above. So when price comes back into it, it could tap into this area and leave higher. That's why I had this put out here. So price gets to the area, and now you get your double bottom within the area. But you also get the candlestick pattern that we like to see. So then price pushes up, and you get the candlestick pattern to the top side as well. But what happens? Price comes back to this area. Within this area that it left behind. And what do we get? The same candlestick pattern again. Knowing that if we did take this long, we came back into the area, we can take this long again out of the area. But we got our confirmations within there. And it was just finding those patterns within the areas of our entries. And that's, you know, just the simplicity of what we were learning on Zoom. And, you know, I look forward to doing that a lot more, you know, throughout the days, throughout the nights, whenever it is. Genuinely had a lot of fun. Hello, Dave. How are you? I heard you use on a live Zoom call. How can we be a part of this? Do you do this on a regular basis? So I do Zoom calls every now and again, you know, sparingly. It's not a real schedule for it. Last night I actually I had a friend who I wanted to show some stuff with trading, and you know, I asked him if it was okay if other people came in too, so I could just teach everybody in one session, and he said it was cool. So I had sent it out to the group. This is the Telegram group. I sent it to that. Remember, we have these levels up here, guys. We just want to make sure that they're not tapping into. So we do have this level from across the way. We still have price lingering in this area. You can have these little pushes up, but oftentimes that doesn't signify that it's breaking out to go higher into like the 400s. There's just things that need to happen before then. So I mentioned that we were breaking to the upside here. We could possibly run the high because of what happened within our imbalance here. So if you look here, and this is why I want you guys to be able to spot the imbalances yourself, because you can see when price gets into an area of an imbalance right here. Tiny one. Right inside of here. What happens in our area of imbalance? That candlestick pattern that we like to see. So we get the candlestick pattern, and then we get the test of it and then we go. You see why I said this pattern is important and why I'm drilling it in you guys' heads so you understand this? We tapped into this imbalance. We got the candlestick pattern that we were looking for. Price traded up and came back and tested the pattern and then left. That's the same thing that happened here. We got, not only did we get the candlestick pattern, but we also got the structural pattern too. So when the candlestick pattern was formed here, price came back to test it. Let me just clean some of this up because it looks ugly. Price came back to test the candlestick pattern that we had, and then we left. So we have this structural pattern created, and we push above, and then we create the candlestick pattern again. Where could price go and retest? If price usually has a retest on the pattern, where can price possibly go to retest? What area did you see the pattern happen in and not give a retest to it? That area becomes the unmitigated area, this portion here. So within this portion here, you might want to look at, if there's any imbalances within here or anything, and maybe gauge that as where price could potentially come back into, tap, and maybe trade further if it wants to trade further. But when it gets there, you want to see the same pattern set up here. And that's if it crosses this and this, because this could come back to the imbalance a second time and then leave and trade higher too. But if it comes back to the imbalance a second time, it has to give us the candlestick pattern here, and then it trades higher. So we're always paying attention to that. And that's not necessarily just a candlestick pattern that you see. It's more so, there's rules to it. You have the low put in, you have the high put in, you put in another low, then you run the high, then you come back to test it and you go. So there's rules behind it too. It's not just, when you see this trade, it's looking like a Star Wars fighter jet or something, which it does look like a pretty cool, fighter jet. Pew, pew, pew. But you're not just trading it because you see that. Like, there's rules within this as to why we get involved in a market like this. Slim, what's up, man? Slim, good seeing you, man. How are you, brother? Could you record Zoom calls and upload them to YouTube in the future? I was actually thinking about that. I was really thinking about if I should record the Zoom and then put it on YouTube. But the truth is, sorry, that was pretty loud. My bad. The truth is, the Zoom, there's like some secret sauce in there. Like, I don't know what it was last night. I don't know if I was just tired and I just ended up in like a very creative mood, and we just started like explaining everything, throughout. I have no idea what it was. So we tapped into this S&D, by the way. This S&D was responsible for this structural break to the top side, in the intermediary structure. So that's why we tapped here and we had to push up. But we still want to monitor here. We didn't run any lows here, so this could still continue to try to trade higher, unless we violate one of the lows, which there is a trend line, forming here. Sorry, I don't know why this thing doesn't click sometimes. Look at me talking about, I don't know why it doesn't click sometimes. It's me, obviously. I'm not clicking it. I'm blaming it on technology. I'm on my boomer behavior. But I was actually gonna send it a little earlier, but I sent it pretty late. But the Zooms, there's so much sauce in there. Like, these guys on the Zoom last night, I'm sure they'll never ever need me for trading again. If something ever happened to me, they'll never a day in their life need any other teaching and direction other than what I taught them last night. So there's like some secret sauce in there that Like people who I see that are very engaged and really, really have like that strong desire to learn. Those are the people who I want to share this with. Like I don't want to share this with people who will just not do right by it, like the stuff that I taught them yesterday in the Zoom, they'll be millionaires by probably sometime next year, like, or even the end of the year, if they continue to like, use it in their trading, they'll be millionaires in no time. That's how great the info was. But I just want to make sure that people really want it. Like I wasted my time a lot when I first became profitable. I wasted so much time trying to get people who did not learn or know about Forex to understand it. And I spent countless of hours. I missed birthdays. I missed, just opportunities to do things. And it was because I was showing people things and they weren't applying themselves, or they wouldn't study in their own time. They would just wait until they had access to me. Then they're trying to learn and they're trying to make money. But it's like, you got to study this too, because then you put most of the work on me. One thing I love is that, some of the people in the group, they're seeing the same things that I'm seeing. And that encourages me to let me know that, like there's some growth there. So I was a little discouraged early on where I had did one Zoom call some months back and never did another one again, because I was just a little discouraged that people weren't applying themselves. People weren't hungry for it. I mean, this is the right information, not something that like, oh, study and learn, you might be able to get it. No, this is, once you're exposed to it, it's instantly going to click for you and your mind is going to be blown forever. That's the type of information that I was teaching on the Zoom last night. And for the people that was up and they got it, cool. For the people that couldn't, I understand, it was late at night too. But we're going to have future Zooms as well that we continue to, like work within that same stuff that we were teaching. So I don't mind reteaching it again, but, we'll definitely have those in the future. Let's see. I am late for the top. No. You're not late for the top down. It was just like a Suedo top down, little fake top down, not really much, because we pushed up heavy into these areas, like very, very heavy into these areas. We were gapping at some point up. Like look at these gaps within here. Look at this gap here. We were down here. Price closed at 31.80. Price opened up at 31.98. That's within a flash that it did that on this 10 o'clock candle. And this is because consumer sentiment news happened. Within a flash it pushed up like that. So with these gaps we could also return back to them. I didn't notice that this gap was here until I just saw I saw it in between the indicator. If you look within here, this is a lighter shade of green than this is. So it kind of exposes the gaps a little, since they're not necessarily the same green. You see that? But there's gaps everywhere, within this. That's why price often comes back down to these areas to test them and then leave. And this is a pretty cool indicator as well, guys. I keep vouching for this. I keep telling you guys, this is the imbalance indicator. There's somebody named Travelin something that created this. He was pretty spot on with it. Kudos to that guy, Travelin Trader or something like that. I don't know if he's an actual trader or anything like that, but Travelin Trader, he created this pretty neat indicator. If you can't spot imbalances by yourself, you can utilize this, but understand that this doesn't account for all the imbalances, because look, we have a huge imbalance below right here. And price, the indicator did not even pick it up. And that's a huge imbalance in here. So, this would train your eye to see imbalances. But again, any and all indicators are lagging. It's always in past time that it's letting you know whatever it is. So I'm completely against indicators. You can see everything on the indicator, that everything that shows you itself on an indicator can show you itself with price. So you could see where everything is just based on, you know, the price here. If you want to find I don't know, like a 200-day, you know, like 200-day moving average, like where prices has been trading within that. So we know that within this time here, let's take this area to this area. We can just take 200 days actually. Let me see. So it's about 200 days here. We know that our average was above here. So if we look down below where price is, we know that we're underneath the 200 moving average. You don't need an indicator to like, you know, let you know this. Price can show you this. And when price shows you it, then, you know, that makes it all the more powerful. I didn't see this this weekly imbalance. I mean monthly, sorry. I didn't see this monthly imbalance here, guys. Something to probably note for the future, because then this would indicate that we could potentially have another leg down in the stock market. And that would essentially be to here, 29,193. So we could potentially tap into this area before flipping bullish. The market could have another leg down potentially in the long term. So that's just something to pay attention to. This is on the monthly chart. You know, so maybe that's where we get our tap, and then we push up to come back to a higher market. Maybe it's this that they're aiming for, this imbalance. So yeah, that's how you're able to figure out the moving averages. I don't need an indicator to show me that, because I just took the 200 days within the monthly, and I was able to capture what the indicator captures. We're under the 200-day moving average. Price can show you that. You don't need the indicator to show you that. Now, granted, the indicator probably shows you it faster in terms of the averages, but the averages only matter really in stocks. The moving averages do not matter in Forex at all. Like at all. I know people use them, and I know people have these theories about them, and cool, great, amazing. If you use that, that's cool. If it works for you, that's fine too. All of this is distribution up here. So this is potentially shorting back down to some of these areas. So just be mindful of that. But yeah, you know, you have, let me move this indicator up before people come in here and be like, you use an indicator, you say you don't. I was just showing you guys that for, you know, so you guys can see that. Dave, that is like, give a man a fish and he will eat a day, but teach a man how to fish and he will eat forever. Exactly. He should apply what I taught him. That's exactly it. Like that's exactly what I was, you know, like saying to people, that like I could show you where to take a trade from. You guys see that I call this stuff out all the time. Like I'm like, oh, it might go here. Okay, here. Oh, bounce up this imbalance here. That might run the high here. Oh, just look at equal high here. Oh, that could end up running the low. You guys see me do that all the time. Like within all the past videos. I can tell you where to get in on trades. I can go to the 15-minute and be like, yeah, you can take it from here and then you can get out here. Because I do it all the time. But when I'm not here, I want to travel. If I'm not traveling with y'all, I'm not talking to y'all while I'm traveling. No, I'm kidding. I will sometimes be in a group, you know, talking and chatting whenever I can, or if I don't get in trouble. But, you know, other than that, like you know, it's a no-brainer. It's so price came back into this area and rejected out of this area. This could be a rejection that's sufficient enough to end up running the lows back into some of these areas. I know there's a little imbalance within here, so just look out for that. And I pause sometimes while I'm saying things just so you guys don't miss certain things, because I see it, but that doesn't necessarily mean you guys might be able to see it. And look at this imbalance tap. We tapped here and look at how far we came up. 63 pips just from this tiny imbalance within here. You got the tap. You got the high you got the high ran. You tap back into the area. We disregard the wicks because that's manipulation, and then we pull out of the area. So you're looking for the range of this high and not this low, but the body. That's only when price trades below the wick to the left. So you see how I said we could be shorting out of this area? I could have easily gave you guys this trade and been like, oh yeah, we could short out it. But if you guys don't know why, it doesn't serve a purpose. And then you get this rejection here and you might be scared and be like, oh, you know, price looks like it's not going down. It could very well just be this here. Right here. Tap into this area. This was an unmitigated area. When price took out this high here, after putting in this low, when it took out this high here, it never traded back inside. So we got the tap here. So now from the area that we were talking about where there was the possible rejection down to the area that it tapped, this is 23 pips in just 1 minute. $20 in a minute, $200 in a minute, $2,000 in a minute, whatever it is that it means to you. Just understanding that simple principle just got you what people make an hour or sometimes. So I can show you guys trades. Yes, like get in here, get in there, if I showed you guys my trade history, you wouldn't believe the amount of money that like I come across in these markets, both lose and win. Well, now it's not really losing anymore, so it's like sparingly on trading. But you know, both lose and win. If you guys saw it, it would be like, what, you lost, or you're in drawdown by like $5,000, and then immediately you're plus $20,000 in profit after $5,000 drawdown, and $5,000 drawdown is just like couple pips. It's like very, very like, you know, high frequency in a sense. And I did see something with binary. Somebody told me about binary, like synthetic indices. It looks like it moves the same exact way. So if you guys learn this and that's something that your country does or is interested in, then, you know, like it's the same thing too. We could be shorting down to this imbalance, guys. So just be mindful of that. Even if we run certain highs and we pop back up, sometimes that's just a retracement back into the area to continue short. So just be mindful of that. But this is what I want you guys to understand, because the same way I talk to you guys about this, and I talk to you guys about the candlestick pattern here, and I talk to you about it here. Look, it happened on the top side too. We get this wick above. We have this area here and this area here. And then we trade away. But after we trade away, what do? We come back up and test the area. And this is one that looks sideways. We test the area, come back into it, test the area, and we leave out of it. So the actual move is up here to take you down. But most people, they're trading the trend line break to come here. Look at the difference in value that is. Let's say you traded the trend line break to here, 23 pips. But if you saw this happening and you saw the test of this area, that's 40, 44. So not only is this the discount area, but you're discounting yourself down here. Discounting your own trade down here. If you're not, you know, utilizing and learning these principles, you're discounting yourself there. So I want you guys to expose yourself to this over and over and over and over. And the same way that I talk about it over and over and over and over and over and over again, that's the same way that I want you guys to learn this. Listen to it if you have to. If you can't watch it, if you have a long drive, if whatever it is, like just listen to it then. You know, my voice is sexy enough. You know, no, I'm kidding. But just listen to it. You know, like you don't always have to see it, but just let it like travel through your mind. Let it just wander in those empty places, or not empty. I'm not calling people empty minded, but I'm just saying, like, let it like get into there, like, let it just, in random places it's coming up. Like now when I know in America we have football here that they play. It's a huge sport here. And everybody's like, oh, the SEC, conference title. And I'm like, the SEC plays basketball or football or whatever. And then I'm like, oh, the SEC is a conference in football. It's not it's not the governmental authority for stocks or securities and stuff. So okay. But sometimes, I get that, so yeah, like, that's how much it's going through my head. I'm sure that I have friends who are tired of me just always talking about this all the time. I'm more than sure that I have friends who are tired of that. Like, absolutely are like, give it a break, bro, But just getting it in your mind, having it like just go through your mind at all times. I'm in church and I'm thinking about this. I'm in the grocery store and I'm thinking about this. I'm checking the market to see if it moved when it's closed. That's how submerged I am into it. It's closed and I'm still looking at it like, let me look back and see what happened, during FOMC. Okay, yeah, that was it there. And the market is closed. I can't do anything. But I just have the obsessive nature of loving what happens with the market, So you guys definitely gotta, like, get to that place, because then you'll start to see things the way I see it. Then you'll start to understand things the way I understand it. And that's when, like, it becomes so much more powerful. Now I trade when I want to trade. I don't have to trade. I trade when I want to trade. I trade when I want to get something. So the other day, not the other day, like, some time ago, I went to Colombia. And for me, I was like, if I want to go to Colombia, make that money and go. And then I've successfully earned, this might be pushing up above this high, so watch it. I've successfully earned, because this is the tap back into this pattern. I've successfully earned that trip to Colombia. So because I've earned that, and because it's something that I worked for, I'm going to enjoy the hell out of. And I'm going to do whatever it is that I want. And I'm going to even make some money to have as cash on the side. And now I've funded my entire trip just because I was able to go into the market and work for it, set it up. So that's the power that you now wield. You now possess that power to be able to live a lifestyle where your salary could be anything. Your salary could be anything that you want. Anything. Your friends should know the power of Forex trading and have the freedom they want in life. Exactly. This is why I wanted to run around and teach everybody this. Everybody. I'm like, oh my gosh. Our little tiny minds thought that it was so inaccessible to becoming a millionaire. We knew there was a way, but we thought that it was hard work. Nope. It is not hard work. Yeah, maybe the hard work is the learning, but the actually like making the money, look, that might be an equal high right there. Making the money? No. Not hard at all. Once you actually learn and you get like the real information after all of that garbage information that you took in from places, it's so easy to become a millionaire. That is the goal. The goal should be like, if money was a goal, the goal should be to become a billionaire because of how easy it is to become a millionaire. Through this technical analysis, through this. Because I'm analyzing the US 30. Mind you guys, I said I could analyze stocks. I told you guys I could analyze commodities. Look, this is gold maybe. Did I have a trade in gold? Look at this. Look at this. Oh my gosh, look at this. You guys know where I found this trade from? Ali, don't beat me up for this. This area here, from this area to the left, look at this tiny area right here. Remember the candlestick pattern that I tell you guys about? So I love teaching this because I prove it in real time all the time. Nobody can tell me anything about it. So Miss Brown, I don't know how to exactly pronounce your name, or you may not even be a miss. I don't even know. I'm so sorry about that if you're not. But you had asked me about hidden S&D zones right here. I told you it's the manipulation down, and then we end up immediately running the high here. So we ran this low, and then we ended up running the high. So now we're looking for price to come back within the range of the last high and low, which is around here. But while we're looking for the range, most people might be looking at this S&D here, and then price what? Goes below it. But there's this long wick that was left behind. This is the S&D below, the wick. So if you take the wick and you place this around the wick, where do you get a tap? Here, and then you go. That's where the real move is, in the hidden S&D zone. But I had mentioned, well, not mentioned, I saw this on gold. I told you there's like a couple streamers who stream. I go in and try to find a trade that they're trading, like a trade on the commodity that they're trading or whatever it is. And so I go to find the trade, and then I come back later on to see if it played out. Look at this. So I had this area here. This is June 16th. So this is a couple days ago. I had this area here, and I said price would tap here and go up. But that was after all of this imbalance was left behind. So price never came back here until, not never, but it came back here later on over here. So look, price taps into the area right here. Price taps into the area here, and look at where it pushes up, all the way up here. This is a $5 movement on gold. Mind you, these streamers are taking $1 or 10 pips or 50. This is a 50 pip movement. That's 10 pips is what they take. So every morning I come in just to keep myself fresh. I try to look at other streamers, find what it is that they're doing, and then look for a trade within their area. So you have this area right here, but then you also have this imbalance here. Tiny imbalance on the inside of here. So, and then not just that, this is the candlestick structure that we say we want to see. Not, well, the structure, this is the structural shift that we want to see, the bullish flip on structure. But then within this candlestick here, did we ever get a test that came back into this area? No, we didn't. Price left the area, left this candlestick structure behind, or this candlestick pattern behind, and we didn't get a test. So this becomes an area for later on. This morning I went on the stream to, just see what these people were trading. Saw some people waiting on movements for gold and all that stuff on the 30-minute or the hourly or the 4-hour. And then they end up taking 10 pips on gold. 10 pips alone. Cool, you take 10 pips on gold. Maybe that's enough for people. Fine. But I went and found a trade while they were waiting for a setup. And I got a tap on gold here from across the way. All of this here equal lows, all being ran. It's liquidity below that. If price doesn't react here and give us a new high, then we're running the lows, which that's what we end up doing, running the lows. So as we were running the lows to come back down here, I said to myself, okay, we could tap into this area. But this second line here is the imbalance. The first line at the top is the imbalance. The second line here is the actual zone, the candlestick pattern that I told you guys, to pay attention to, and where we get retests from sometimes. So we tap into this area and we push up. Look, we push all the way up. $10 on gold. This is 100 pips. 100 pips on gold in 10 minutes. And these people are on the 30-minute, the hourly, and only taking 10 pips. From the 30-minute, I should be getting 1,000 pips if I'm trading that high up. But this is what I'm talking about with people who lack the ability to read price, because they can't. So we get a tap into the area back here because of that candlestick structure that we saw where it wasn't retested. So look at what we have here. Same thing on gold. Not here. Let me actually use here. Look at this. Low put in, high put in, low put in. We run the high, come back into the area, we leave. So even if I saw this trade here and I got into this trade and my stop loss was really low, his stop loss was like 30 pips for just gaining 10 pips. That's crazy. But now that I got this entry here from the left side, this entry usually is the scalp up. So with this scalp up, I mean, it just kept going. I told you some scalps can turn into long moves. But if we noticed this candlestick pattern, the candlestick pattern turned into a structural pattern. Once we saw that it turned into a structural pattern, what are we looking for? Price to come back, test within the area, and then leave. And look, this is where the second entry goes. We get a test into the area, and then we leave. So now that's two trades. But with this trade, if you were getting a test into this area, your stops are behind here. That's a lot of risk that's on the table. So we like to, the same flip that we see here, we like to see it at our entry. So now what do we have here? And this is why it always gets so saucy. We have this high put in right here. We have this low put in. What do we have? Wham, a run of this high. So what are we doing? Coming back into the area. And this, we came back into the area by 90%. So that's why sometimes I'll use the last candle of the area. And then we come out. So guess where your entry is? Your entry is here. Or if we're being honest about like where your entry probably would have been, it would have been the middle of this candle here. Stops behind the zone. Don't care about the wick because it's manipulation. And we're trading higher. So now we go from a 50 pip stop loss to a 7 pip stop loss on the second entry. And then since we know the structure was created this way, now we know that we're running the high too. Because the structure created the pattern as well. So we get the pattern with the candlestick. We get the pattern with the intermediary structure. But then we also end up getting the pattern within the larger part of structure. So what you might have here is gold run this high. Run this high, come back within this area, and then leave out of the area. So then what you end up having here, what you end up seeing is This run of this high to come back into this area is only testing this candlestick setup here, the structural setup. Remember I said we always get a test into the area and we leave? It's only testing this area. If it goes up above this high, comes back into this area and then leaves. So that's how we're able to kind of see moves ahead of time. Because now if it does this, now we're looking at a larger setup here that happened to let us know we could potentially be coming back up to some of these highs up here. Whereas smart money is going like this and they're waiting for the trade to get up there. Or they might be down in here. They could be down in here. But how do they get involved in here if price already tapped? They look at this and they go, okay, don't chase. Let's let it get back up to this area because it looks like it's been downtrending ever since. We tapped into here. We came back up here. We tapped back up here. We tapped back up here. And we could be coming back here to continue making more lows because the real move could be down here or below it. So this could be this entry here, this area here. This was that candlestick pattern that we talked about that was untested below here. So that's why we can expect a rejection here and potentially continue down to this area before going long and potentially tapping up further into the actual area here. And then we can continue short and crash through all of these here. That could potentially happen over the long term. But within these things that we're doing here, we're essentially just creating a story on each thing that's touched. So I hope that explanation helps some people, because that changed my trading forever. That whole explanation that I just gave about this on this other streamer's trade changed my whole life forever. And this is just on the 5 minute on gold. I told you I can trade anything. It doesn't matter what it is. We went to the Hong Kong exchange right here. We could potentially find a trade within here. So price breaks up above this high. We have our little candlestick pattern here that we like to see. We also like to see the rules within that pattern. So we come here, put in this low, put in this high. We put in this low and then we run the high. We tap back into the area and we go. Same rules, same thing. I'm trying to get you guys to see this all the time. All the freaking time. Because it happens everywhere. It happens at the top. It happens at the bottom. This is a sign of a reversal. So this is actually how you find the reversal. Utilizing this pattern. And if price drops out of this area and comes back into this area around here, it can just be retesting this overall pattern to continue trading higher. So this becomes the area. And what makes this area important too? If you look to the left, this area was responsible for the structural break. This pattern. So over time, if this is trading higher, we could expect to tap into this area here, somewhere within this area here, and then price to trade higher. But if we go below this area, then we're potentially looking to short if we go below this area. But we would have to significantly go below the area, because this is the last high. And this is the last low. So now since we have this area here, we just broke above it. This actually becomes, let me see, hold on. Here, 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 this validated this. So now we're within this range of this high here and this low here. And look at how many pips are within this area. From down here to up here. So now the next cycle of the week or the next couple weeks, price could do whatever it wants in between here. And all you have within this area here, are losing traders. That's all you have. Because this is the area that they bought at. And they bought you up and then sold into this area. And this is where they started buying. And then when they bought up and broke this structure, they came back into it and sold into this area. So now you're within this range and people are just losing within here. Because they're not seeing that now this is the area they bought in. And look at how these lows are forming. 1 low here, 2 low here, 3 low here, and they're higher highs building the trend. And they bought you back up into here and made you think we were going to run the high, and they immediately traded below it. They traded lower to here. And they just tested the area that they bought up from, and they pushed out of the area and finally got us above here. So now this is an area that price can come back to within this lower part of the area. So if they end up running this low, that's okay. If they want to trade higher, they could come down here, tap into this area, and then put in a new high. But if they don't, they could come down into, let me actually move a lot of this because I know it looks a little distracting. If they don't want to come back into here, they still have this whole area down here that they could short back into, and this is where the right move could be at. And then they continue up. But that doesn't mean that you can't get a reaction within this area. You still can get a reaction within this area. But this reaction within this area would come down to here to bounce back up, tap back into this area before shorting below it. So the real short could be the retest of this area. And it's the same thing over and over. And I just explained this on gold. Same explanation on the Hong Kong exchange. I explained this on Japan yesterday. Like every market, any market, same thing happens, same thing applies, no matter what market you're trading in. No matter what market. So I hope that explanation, helps you guys to understand that. Again, we have a Telegram group where we go through this, I'm always spamming the chat with stuff, always just like heavy spam in the chat with we're working on a Discord. It's almost done. It should be done by the beginning of next week because we have most of the components already. So we're going to spam the Discord with it. But look, you have people even here showing different trades that they're getting into just off of some of the concepts that was created. So we have a lot of discussion about the different things that can happen. I share some stuff in here sometimes about what price can possibly do. And then we just go back to see if that's exactly what price is doing. So within this area, I had mentioned that if we come above this high, we would end up coming back to test this area and then we would leave. Why are we testing this area? Because this candlestick pattern that we see, same thing, without a test of the area. So we tap back into this area and then we trade longer. We explain these things over time. Like we begin to see certain things like within here. I spoke to them about taking this area, taking Wyckoff, placing a square around Wyckoff, and price potentially coming to the middle of the area and then shorting. And then we have other areas below where price could potentially short too. But we also had this area here where price was longing from. So we had the long from this area to the short here back into somewhere within here or within here. But I think we came back down to this imbalance here, and then we ended up trading higher. But this is the Telegram group. We all, like share different things that we're seeing. And like I said, there's some people who see the same things that I'm seeing as well as they're learning. This is where the private Zooms will be shared and just the different things different ideas that we have. If anybody's in a trade, we'll just look at what the possibility is for the trade getting to the area that they're expecting the trade to get to. So we always post the possibilities of these things potentially happening. So look at this. This was on EU. I don't remember exactly what I was putting here, but I said we can come down into this area down here. We can go up above to this area here. And then if we cross this high here, we can come back into the area and then leave. So what happened from across the way when we crossed this high here? We just crossed the high. We tucked back into the area. But look, candlestick pattern here, this bullish flip, it takes us up and runs the high. This bullish flipped off of an imbalance. So we have price come back to an area for us. And what do we get? Another bullish flip around here. So we go up. But what do we notice as we're going up? We notice, I know that looks bad right now, guys, but bear with me. We notice the larger structural flip. So if we're coming out of the area and we see the structural flip, then we know that we're taking out the high. And that's where we're trading to, a run of the high. And that's because these same principles. This is on a Forex pair. I don't trade Forex pairs like to make money on. I don't trade Forex pairs. But analysis is analysis, no matter what market you're trading in. Analysis is analysis, period. There's no other way other than analysis. Period. Analysis. Look, this is a 5 minute. If you were looking at the price on the 5 minute when it was here, look at this imbalance that it tapped into. Tap of the imbalance and what? Are we going to run the low? Possibly. And then what? We can get another tap into the imbalance again. If price does come back up here before trading down here, if we get another tap into the imbalance, then that's a recipe for the lows being ran. And I already probably have these lows being ran because there's some imbalance within here. We already tapped into lower portions of the area and traded above, but we didn't give another high. So this is an equal high on a higher time frame. So the first thing we could expect is this low being ran. But we need to be careful around this area because look, we have the candlestick setup that we usually like to see. So this could potentially just be coming back in to give the third leg of this setup and then trade higher. And it looks like a little cat paw, bearish claw, whatever it is you want to call it. Like make up your own name for it and run your mentorship teaching it, but it's essentially, this same thing. We just don't have a mitigation to this area. So because we don't have that, this is where price could be sending us down to tap into this area and then potentially go long from here. But it could send us down from this imbalance, or there's still this area above here that it can come into. So you see, I said price can tap into this imbalance here, or it can trade higher into this area. And this is where the short could be. The long could be within this area or just below this area right here. I mean, anywhere within this region, really. Because when they talk about discount and premium areas, you look at this whole move here, from the bottom of this move, the top of this move here. This is not a discounted area for them to continue to put in new highs. This is the discounted area down here. So you're more so looking for anywhere between the start of this area, which is the run of this low, and potentially trading higher from some area within here. but not within this. You know, so that could be EU for the day. Look, we get another tap into this imbalance and a rejection away. Again, we get a tap and a rejection, that's fine, but we want to make sure that we get an equal high somewhere along that line. So maybe we'll look on the 1 minute and see if we get an equal high within here, and then the equal high could be taking us out of the area here. And what retail traders are usually seeing within this is that they're seeing this here. And they go, oh, support, term, resistance. And that's not the real way to trade. So we want to see that. So we know we were coming up to this, but we want to see that happen within this region, or else it could just trade higher within this area. So we have rules to why we get into trades and why we get out of trades. And those rules stay consistent. Like even within here, a lot of people probably don't see, but there's a mini imbalance within here. Right here and here. Yeah, right here and here. So you could have price come to sweep these lows, tap into this imbalance, or within this S&D here, and continue trading higher. Why? Because it's below the premium level that, you know, banks usually want to trade from. The imbalance is near the premium level, but the imbalances at the lower level could end up being more likely than this imbalance here, because it's below the premium. So the premium really is this area here. So if we're expecting a tap back into this area here, you know, this is like 75%, down here is like 80% or so, but this is the premium of this move. So that's why you can expect a short down into the premium, but when you get to the premium, you want to see the same candlestick setup. So we have this candlestick setup here within this region, but when we get down here, we also want to see this again within structure, so we know that we're possibly running the highs. And that's, you know, essentially the way that we trade here. If I can take a minute and tell you guys that I'm not a financial advisor. This is not financial advice. This is just my perspective on the markets. Anything taught within this channel is always based on my perspective and the education that I'm giving into the markets. If you choose to take trades within this, then that's on you. If you lose your money, blow your account, that's on you. It has nothing to do with me. I'm just, with my teaching, if you apply your teaching, you're not going to blow your account. But if you do blow your account, that's on you. So we could potentially be getting the candlestick pattern up here. The pattern that we like to see. We could potentially get that up here. So you could even have a run of this low, tap back into this area. It shows us the candlestick pattern that we get, and then we actually get the short below into here. And then that would only correlate if the dollar is longing. If the dollar is longing, then you should get the short from EU, because obviously anything against the dollar, if the dollar's longing and going higher, then obviously the pairs that are against it are going down essentially. So that both this looks like it's shorting, EU looks like it's shorting, and the DXY looks like it's potentially longing. And where could it long to? Potentially here and get a rejection, or here and get a rejection. But we put in another low, so we want to make sure that if we go above, we don't want to run this high. Sorry, I don't know why this doesn't click sometimes. We end up running this high. And if we run this high, and we expect price to come back into the area within here. Why are we expecting price to come back within the area? Because then it'll show us our candlestick setup here. And then the dollar might long up into here. And why are we longing into here? Because obviously we're putting in lower lows, but this is our candlestick setup from the top side. We did get a retest of it right here. So we could possibly even look to go past it, since we already got a retest of it when price traded out of the area. So this could essentially be looking like a long to potentially go to the high, or take this high, tap into this high here, and then the short may actually be within this region here. Shorting from here, potentially. Shorting from here, potentially. And this could be where the long is to take us higher. And it's just the story that price has given us, just utilizing these things. And the reason why this area is likely to short is because, look, likely to break up above is because, look, this is trendline liquidity. Whether it's this here, whether it's this here, it's all trendline liquidity. So we could expect price to run all of it, tap into this area, reject, and come down. But if we come straight down from here, then this could be where the long is, running these equal lows across here, and then potentially taking us back up above this high here if we get down here first. So all we essentially do is just find ways to, get involved in the market. Whereas smart money, they're waiting for the market to come to them. And it's cool if you want to wait for the market to come to you, you just be waiting a pretty long time. And that's kind of why I use the trading techniques that I use, because, I'm joining in on whatever it is that the market is doing. I'm joining in on a continuation of the market. So look at this. You have the short out of this area. And where do we short to? There's an imbalance between here. This is the imbalance that originally sent price up. So because this imbalance was tapped already, you could have a second tap to the area of this imbalance, and then price trades up again. Because remember, I said the first tap on the imbalance is usually the scalp up. And I mentioned this scalp gave you 60 something pips. Price returns back to the imbalance again. And now you're looking for your move here. I told you we could be trading higher because this area here. I said, watch it. We could have a pullback within this area and continue higher. I think we were like right here when I said that. Because it was the second tap of the imbalance, the double tap of it. And the double tap of it traded us higher. So now if price is going to short out of this area, we know that this imbalance has done its job, or price has done its job in filling this imbalance. So then we'd end up looking for it to potentially short below the area of the imbalance to potentially some area within here, because this is still an unmitigated area. This is still an untested area of this setup. And this is it happening on the top side, just like it happened here on the top side. So this happens over and over and over and over again. And I try to teach people about it so they won't need me, because I'm going to be traveling. I'm going to be seeing the world. I'm going to be in Aruba and Greece and all those different places. And you guys I might not have internet connection. I barely had internet connection in Colombia. And I had the audacity to be trading when I barely had connection in Colombia. Barely. Anytime I left the hotel, there was no connection at all. No internet connection. Look at this. You see this area that we like to see? Look at the tests within this area. We tap into the area, we test. But this could just be coming back up to tap into this area here before leaving, because this would just be the retest. But usually the retest comes after the run of the low. So we probably want to wait to see the run of the low first, and then potentially tap back up into it. And then that's where the final short could potentially come. Yeah. So this is pretty much different than it's some of the same rules within smart money, but it's not all of that, oh, wait for the market to come to you, don't over trade. If you don't find a setup today, it's all right. There's more tomorrow. No, smart money doesn't teach you that. No, there's a setup every single day on every single time frame. And there's multiple setups. I could find 3-4 setups on an hourly time frame and watch it play out throughout the rest of the day or potentially into the next day. There's no way that I should come into the market and not find a setup. Absolutely no way. Absolutely. You see how I just said to you guys that, oh, this could be a retest of this area, but when I looked above, I'm like, oh, wait, no, we usually break the low first. And after we run the low, then we get a retest of the area and it leaves. So that was, some indication to stay out of a long going up. And potentially enter a short, but where? To the run of the low. And then we get a retracement. And look, we just ran this low here. And now we're getting a retracement back up. Potentially to here, potentially back to the area above. But we ran that low. And where did we find support on the run of the low? Right here. OB. Forget the wick. That's manipulation. Don't care about that. Tap into the OB. I'm telling you guys, I do this every day to show you guys that, there's nothing better than, look at this. Look at this up. Come on, man. This is just a scalp. 22 pips up. Just noticing this area, not paying attention to the wick, taking this area, having price tap in and go. And look, price already tapped in here and gave us another high. So that means that this area is an invalidated area to begin with. It's just that just because it's invalidated doesn't mean that it can't give you a reaction. So this area is an invalidated area. We're not expecting this area to give us higher highs because it already did. We tapped into this area here and it gave us the higher high. I mean, unless this is a double bottom to the area, who knows? But, nonetheless, the scalp up is usually the first entry that I get. We scalp up 20 something pips, come back into the area to potentially test the area. Look, we got the test right here. And we could potentially go back up to here. But when you begin to learn these things and you begin to familiarize yourself with this stuff, then it all starts to come to you just as fast. This is on the 1 minute in the New York session. Most of the times I'm talking and I look up at the time and I'm an hour and a half in. Look, 1:49, an hour and 49 minutes. Hour and a half in because price is moving so fast and I'm trying to teach while helping you guys adjust to everything within the market. And then you end up, with beautiful stuff like this because there are reasons behind it. So we talked about shorting from here to potentially the imbalance here. But then there was this imbalance within here that price was just double tapping and gave us another push up. And within here, there could be an imbalance further below here. I'm not saying that there's not. There could be. Because on a higher time frame, it could be like a 5-minute imbalance that price is tapping into. So no, this is not a 5-minute, maybe a 3-minute. Little tiny one here within the 3-minute. That's the double tap. No, 2-minute. Let me see the 3-minute. No, nothing there. So this is definitely within this area. This is definitely an imbalance on a lower time frame than this, because of how far down it came below it. But then we still saw our candlestick setup, and we still got a test of the candlestick setup, which I mentioned that we look like we're testing the candlestick setup. And I mentioned it right here when we were down in this area. So then we ended up trading higher. After tapping into this balance and after testing the candlestick setup. So we don't have the same thing here. You see how I just mentioned that this was a retest of the area and it was just taking us back up to here? If anybody took that trade, 32 pips up. Just within 3 minutes that I just mentioned this. So that's why I'm trying to get you guys to understand how powerful the techniques are, like how important it is to grasp what I'm saying, because it's happening right in front of us over and 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 over again. It's happening over and over again. And if you bunker down on learning this, man, you will never need me again. You will never come back to this place again to trade. Ever. You will never come back to this place to trade again. So because you may not come back, you might want to hit the like button and subscribe if you're new. If you like what you're seeing, if you like the teaching, if you're learning things, subscribe. You know, we do this every single day. We do this sometimes in the evening during the Asian sessions. We do this whenever we want because this is our life. I don't have a full-time job. This is my full-time job. And I will never again in my life have a full-time job. Not saying that it's bad that anybody else has a full-time job, by the way. I'm not saying that. Watch this high here. We could potentially come above this high and tap back in before trading higher just because this possible setup here within this area. But we do this every day. Like and subscribe, guys. Turn on the notification bell. Only 20% of the people that's following me have the notification bell on. Turn the notification bell. Get in for these top downs. They are the most important part of trading. Every single day is the top downs. Those are killers, absolute bangers. And then we just teach the algorithm within the 1 minute. And that's it. So subscribe if you like what you see. If you don't like what you see, you don't have to like the video. That's okay. You can dislike it if you want to. But also share this with other people that you know who trade so they can get the real deal for the stuff that like you have to pay thousands of dollars for this information. I know that this information is thousands of dollars. And I became Robinhood. So I'm actually teaching this. Let me actually save this template. Since you wanted to tell me that I should use a gray background, I'm just going to save it at that. But I'm Robinhood, guys. This is why. Let me show you guys my chart, actually. Is this it here? This is why I initially started with, let me take this no gap candle indicator off. I initially started with black and green candles when I started first trading because I considered myself Robinhood. I'm taking all of the information that's put out there in these secret groups that nobody wants to really share that information with the public. And I'm like, hey, you know, what do I know? I could pass away next week. This could help people, help generations of people. Why should it be all hoarded for those who could afford it? Doesn't make sense. So this is how my chart was actually in the beginning because it signified being Robinhood. I have a it's interesting. I have a tattoo here on my bicep here. You see that, guys? It's right here. It's an arrow. I love arrows, what they represent. I love that Robinhood used arrows to, you know, like do what he did. And for me, I embody that. That's the person that I am. And it's not the Robinhood that turned off the buy button with GameStop. It's like the real Robinhood. So, yeah, I essentially, you know, believe wholeheartedly in if people are poor, they're not poor because they want to be poor. Some people are born poor. Like, it's not your fault if you're born poor. But as Bill Gates says, it's your fault. It's your fault if you die poor. And for some people, we have exceptions to that. We're not saying everybody who dies poor is it's their fault, because the truth is there are some things that happens within government, within laws that essentially causes people to be liquidity at times. That's what this whole recession is. This recession is liquidity. All the money that they gave out within the stimulus, they're recouping that back up. Liquidity. But for me, I just want to be able to help people. Hi, bro. One quick question. Isn't that a rising wedge, or that doesn't? So yeah. Yeah. This could be a rising wedge. Here, within here. Yeah. This could be a rising wedge pattern within here, and a breakout of it, a retest of it, and trade away. But I don't trade retail concepts. I more so just trade the algorithm of the market. So in terms of retail concepts, again, some of them could be profitable. Look, it's falling out of the wedge. Yeah, like it could totally be a rising wedge. But the retail concepts are only like 30% of the time that they actually rising wedge, rising triangle, whatever you want to put it. They're like 30-40% of the time they work. Like it's not consistent. So I really don't use them. I just utilize structure with like supply and demand zones or imbalances, and that's it. Just the way price forms, how it moves. But yeah, if you like, if this is what you're seeing and you're trading from this would be trade to short from, yes, because you see the distribution happening at the top side. You are aware of the break of the trend line, but you're also aware of the break in structure below. Not really a break of structure, but the run of the low. You get a retest within the area. Within our candlestick pattern that we usually teach here on the channel, we get the retest of the area within this, and then we end up shorting out of the area. So we could potentially short past this S&D because this already gave us a higher high above this high here. So we're not necessarily looking to utilize this anymore for entries to go longer, because this is already invalidated. So we would essentially be looking for a short past the area, potentially into this area. You might get a bounce from this area to come back into here, and then you can get another short into this imbalance. Price hasn't tapped into this imbalance as of yet, so you can get a double bottom on this imbalance and potentially come back up to whatever area that could be up here, and then you can get another short down to run these lows into potentially like an imbalance within here to make price come back up, maybe test this area here before shorting again. And that's how the overall trend can be built. And on the higher time frame, this just ends up being the candlestick pattern that we like to see, but just from a higher time frame. That's how the trend could potentially roll out. So yeah, you could utilize the retail trading patterns, as I say, but they just have to essentially make sense in terms of structure. If they don't make sense in terms of structure, then that could be a recipe for disaster, because you could end up just having it come down to here, out of the wedge, and then potentially trading higher after the tap of this area. But again, we're not necessarily looking for the tap of this area to give us another high, but there is a possibility that down here, if price gets to it, it could potentially put in another high for us, depending on if it's within an imbalance. Maybe might give us a double bottom within an imbalance to come and run this trend line high right here. Run this trend line high. Run the liquidity above here, and then finally give you the short. And it could end up looking like a manipulation wick above here, and then tap back into the area. So that's just something that you want to consider and pay attention to as you're in the trade, so you're not caught up with just like you don't see the structural shift in price, which shows you that you shouldn't be shorting down into this area. But because you saw the wedge pattern just might make you think that it's safe to take it down through, because I think they use the back of the pattern like here. So they would say, okay, if the back of the pattern is 86 pips, then when price falls out of the wedge, you could expect it to go 86 pips down, which it could technically go, 86 pips to this imbalance and maybe trade higher. That could be right for the wedge itself. But if you see a shift anywhere within this area here, then you might miss that shift where it could take price higher. And now it comes back and hits your stop loss. So the wedges are cool, but that's essentially why I just use structure and just zones, really. Great, thanks for your answer. You're welcome, brother. Thank you, Dave, for your dedication and time for us all. I appreciate this lots. You're welcome, man. You're welcome. God bless you too, man. I do it because I just, I want to see people do well, and I want to see people have an advantage. The retail trader, we don't have an advantage already in the market because we don't have the money. But if we had the information, that could give us the advantage we need. So it's just the information solely that we're looking to get, because the money's in the information. The money's not in the actual market or the product. It's in the information behind the market. Because if the stock market crashes, guess what? I'm trading in Japan. I'm trading in Hong Kong. I'm trading in London's exchange. Trading in Spain's exchange or Europe's exchange. You have so many other markets to trade in if this market crashes. You have the crypto market. That's a global market to trade in. You don't really need to limit yourself to one market. But if you learn the analysis of it now, every market you want to participate in, you're in and doing well in. So yeah, really appreciate the time answering. First time here, already hit the bell and the like button. Great, man. I also have this Telegram that you can join as well. I see you guys. Thank you for joining. Arain, you've been here for a minute, man. What's going on? I know you were in the other chat. You just joined here? You guys can join the Telegram. We're actually developing right now the right here. If you look, let me show you guys. We're developing this Discord here. And we're creating it. We're going to create a public section of it, but unfortunately we have to create a private section as well, just because the spamming that goes on in a lot of these chats. And I mean, they get built up with a bunch of spam bots. Most times people aren't paying to add a spam bot into the chat to bring other people in. So there's a huge issue with spamming through the Discords, especially the financial Discords. So we have to actually purchase certain things within the Discord to keep the spam bots out, some of the verification stuff, some of the auto removal of spam, things like that. We have to pay monthly fees on those. So we might end up having like a higher tier within this. So there'll be a public chat accessible to everybody, whatever it is that you want to add, general information accessible to everybody. And this is just essentially, just getting all the trades that I send out, all the different like suggestions, all the different things that I'm doing, the Zoom links, all of that stuff. And then the other tier would definitely be more catered to the experience of Discord, the live trading within the Discord, because we'll do the live trading in the evening sometimes. We'll also do some personal trading where people are just seeing me hit buy and sell wherever it is that I'm in the market. I'll, let's say, we're shorting from here. They'll see me enter the sell and they'll see wherever it is that I put my take profit, but they'll also see me manage within real time. And I'm not talking to anybody when I'm doing that at all. I'm just trading. They see me execute the buys and the sells on MetaTrader. That's it. So I feel like that would be very helpful for people, especially in a Zoom setting as well. So we're currently creating this, and we're just finishing up the finishing touches within this, trying to make sure we are working within the rules and regulations, especially of the local finance industry, but as well as within the Discord. So again, look at these channels. We're almost done with this. We're almost, finished within all of this. We're going to give some roles to people that we select to be moderators as well. I've talked to some of the people already in regards to it. But, we're working on this. Like I said, it would be, a little nominal fee, price of a cup of coffee or something like that, just to make sure that we're able to get that experience out to you guys uninterrupted and not have that spammy stuff. So we will have a public chat, free chat. It's definitely going to be there. But again, the spamming portion of it, we do have to make sure that we're secure with that, because again, I'll be sharing my profits. I'm talking about open P&L. I'll be sharing, my trades. I'll be sharing even little personal things as well. You just don't want spammers and scammers to have access to those things. We'll have off-topic chats, car chats, whatever it is, that you guys might want to discuss that's maybe not trade related, but we'll have all of that. And you guys would definitely be able to be within that community, whatever portion of that community. I hope that makes sense. Here from UK. Hey, what's up, man? Hey bro, great content. So what is the lowest time frame you would consider a break? Because sometimes if we say H1, it might be too late to enter because the 30-minute break was actually enough. So a break of structure for me usually is the body closure below the last low. So within this area here, we have this low, this high, this low. We have this high, we have this low. We just put in a high. So now we're working within the range of the last high and the last low here. We're working within the range of that until we end up putting in another low and then a body closure above of a high. If the body doesn't close above, then this low is not validated. So when this low isn't validated, we could immediately come crashing through this low if we're shorting, because this is not considered a low on the overall structure, the larger structure. So this is probably a 5-minute structure that I just drew out, or maybe even 15. I'm not too sure, but it's 5 or 15-minute swing points. But this is and this is swing point on a trend. I mean, this is the smaller trend within that. So you have this high and this last low, and price just broke the structure to the top side here. So now not only do we have this and this area, we also have this high put in. So that means that within this whole area here, price can do whatever it wants. So we would need a structural break out of the area in order to give us some indication that price is going bearish. So once we get the structural break out of the area, we might get a retest back into this area and then leave. But the structural break usually is with the body closure below a particular swing point. So if you're asking for the 1 hour, you're looking at potentially a break. You're looking at a break on the 1 hour. This hourly here, right here, this is not this coming up above this is not a structural break, this wick here, unless, let me actually zoom in so I could show you guys a little better. I keep forgetting that you guys don't see the screen as large as I do. So with this here, this is not a structural break right here. This wick coming above this high, this is not a structural break. The structural break is the body closing above the high. So if this body right here, if this body here closed above this high, now that validates this low here because you got the body closure above. So now we're looking to come between this area here and this low here. We're looking for an area within here that price could potentially trade to and then give us another high to break this. So what we're actually looking for is a tap within some area within here. I always talk about the imbalances because, as I mentioned, they're stronger areas than the S&D zones are. But if you want to use the S&D zones, you can. Or the supply candle, the demand candle. If you want to use that, you can. But usually what you want to see when price comes back into this area to let you know that we could potentially be running a high is, let me delete all of this real quick to show you. Usually we want to see this here. The candlestick pattern that we usually talk about, we want to see this within an area of interest. So this here is a fractal. This area here is actually a a demand area on a lower time frame. So let me select this area here and actually show you on a lower time frame what it looks like. You take this and you take this. Price came below it, which is fine because we're still within the range of this. So for the range of this, we essentially have to be below the 50%, in order to get a sufficient enough reaction to take us up and put in another high. So we get the 50% of this move, we have to be below the 50% of the move. We get into the below the 50%, but then we spring up out of the area. After we spring up out of this area, you look at the lows and highs being put in. Low here, we get a run of this high, the lower high, or the higher low, whatever. We get a low of it. We get a run of it. So after we run it, we come back into the area of the range that was ran and we leave. And that's all within our structural break. We found a structural break, so we're expecting it to happen within here because the break of structure to the top side. We're not expecting it to run below this at all because we put in a new high, which means that this low becomes the protected low here. That becomes a protected low. Somebody just rang my doorbell, so hold on real quick. It's probably a delivery man. FedEx. Yeah, so this becomes a protected low here. Oh my gosh, did I check the music? Oh my gosh, this stream is probably gonna get taken down. I'm so upset. If the music is not no copyright, then oftentimes you end up getting the copyright hit on the stream. Damn it. Come on, I'm so upset about that. Because then they end up, if it's a song that's blocked in a certain number of countries, then they end up just blocking the whole stream altogether. So that's the sucky part. But yeah, as I was explaining, oh, you get it now. Okay, great. I'm glad you get it. I go off into like talking, but I want to like explain the whole thing for you guys. So Yeah, that's how it'll look. And on a lower time frame, when you get down to this area here, now all you do is, I mean, obviously, if you ask me about time frame, you probably know about this too. But let me just, show you. On a lower time frame, if you see the tap within your area, now you just want to see it happen again. And look, it happens again here. Same thing, same exact thing. Put in a high, put in a low, run the high, come back into the area, leave. And now you see that happen within your hourly area. And now all you do is just take the hourly move. And even though price comes back to this area here, I mentioned to the guys on the stream, I mentioned that oftentimes when you have this area put in, you usually get a test of the area before trading higher. And that's even on a higher time frame. You get a test of the area before trading higher. Or a reaction off the area. Maybe you may not put in a high. Like, look, right here. There wasn't a high put in, but you did get a reaction from it. So now I mentioned that you can just take a square. Saucy, man. You can take a square and put it around this area. And now look, you get a tap of the square in this area. So you get a tap into the 50%, just as if it's a demand zone, because it is a demand zone. Look at this. On the higher time frame, this is one candle. Here. But maybe it's on the 15. Here. This one doji candle. Where we tap here and we go. But we're just finding the demand zones as they're made, and then we're seeing the mitigation of it. But because time is fractal, you see everything all on the same time frame. Gotta head to work, but thank you once again. I've watched most of your video library and it has helped a lot. I'm glad, Walter. I'm glad that it helped you so much. So happy about that. Let me go back to, hold on, I'm getting a call from my kid. Hold on. Sorry about that, guys. If you haven't yet already, please can you like the video so we can get to the other side of trading Forex, and it would get people out of all of this garbage information that they're learning, and they'd actually get to learn the real things. So please, if you can, like the video. It's good for the algorithm. Subscribe and send these videos in these groups that you guys are in, these Telegram groups, or these only if this has helped you. If this has not helped you at all, don't share it. Don't go lying to people about, oh my gosh, this guy's a great trader, you could learn so much, and then you haven't learned a thing from me. Don't do that. I don't want any liars here. I don't want, if you're not really learning, don't share it to other people as if you're learning. Make sure that you're learning something and only share what you actually learn something from, not just the excitement behind the person. Because I tell people all the time, you want to make sure that you're sharing information with people who they are actually, the information is verified. It's real information. It's things that can go back and be tested, tried, and true. And if you can do that, and this does that for you, then this may very well do that for someone else. So just, share the video, like the video, share it in these groups. I know you guys are probably in a bunch of Telegram or Discord groups and stuff like that. Just be like, hey, this guy teaches live in live markets. You watch him, you don't have to watch him, but he has some pretty good concepts. And if you've learned something from this, then hopefully you can also teach other people this too. I don't care about making this into a commodity. I don't care about making this into a selling a course, or because I could put this all in a course, I could sell this course for $10,000. I promise you, I could sell this course, each course that I create based off of ways that I have to trade. I can certainly sell each course for $10,000 because that's how good and accurate this information is. I don't care. I make my own money. I don't care about nobody else's money. Now, if it's taken away from me, like let's say I start doing consultations, one-on-ones with people and stuff, and I start charging for consultations because it takes away from trading, then obviously there's a possibility that I could do that. But if it doesn't take away from trading, there's no reason. I'm doing this because I love it. I love watching the markets. I love watching all of this happening over and over again. So this is just my love for it. I used to watch charts all day and all night and not stream. Why not show people what I'm seeing? And why create like a commodity off of this? Why create some type of service off of this? Why would I do that? I shouldn't have to do that. I shouldn't want to do that at that. Like I should want to foster a community of people who are making money and who are learning different approaches to the market. And we could actually help each other out with real life skills. Like I know things about so much, like so many things. I know things about credit repair. I know things about getting business loans. I know like the well of knowledge that I have in my brain is not just when it comes to trading. It's just the way my brain processes things and the way that it works. But it's not like you guys see me do this and I'm very efficient in this, but I'm just as efficient in like all the other areas of the things that I consume too. So I'm very, very big on sharing bad information with people. Don't do that. I'm not okay with that. This is people's money that's on the line. This is, like people are trying to get a better life. People are trying to change their living circumstances. Don't do that. If the information does not work, don't do that. I don't care how much you like me. I don't like none of that. I don't care about any of that. If this is not helping you, find something that helps you and then teach that to somebody else and send them the video of whoever that was that helped you. But if this is not helping you, don't share it with other people until it actually begins to help you. And that's how serious I am with this. I'm not building a brand. I'm not creating an empire or anything like that. I'm just trying to help people, and I want to do it with the most accurate information possible. The most accurate information possible. And that's why I'm very big on like not sharing certain things with people because again, you want to make sure that it's the right thing. So I share Pips of Persia stream. I share Smart Money Source because those guys I've tested, seen that they're tried and true with their information. It's accurate. You can go back and test it and see it in live markets, like amazing guys. And they don't even know me. They don't even know that I stream. I've never had a conversation with any of them, but I know quality work when I see it. So I'm going to continue to offer quality work to people, so yeah. Yeah, this helps me a lot, bro. Made like 1K using your strategy. Oh, that's great, man. I'm so happy about that. I want you to do that every day. I was taking $600 and making $1,000 every day with $600. That's only $600 in my account. I was making $1,000 every single day. And this is when I was using retail patterns. I wasn't even trading this stuff. I was just using trend lines. I'm like, oh, if price falls out of the trend line, I'll get it on a quick short. And then wait for the next trend line to form and get it on a quick short because the 1 minute forms a bunch of trend lines and then runs them or runs portions of them. So I was using that. And that was when I didn't know how to trade. I don't recommend using trend lines only to trade with. They could be a good source of like helping you to notice something and then like waiting for that particular thing to happen. I think I have a trend line somewhere within Jesus Christ. There's so much stuff here. I had a trend line somewhere in here. I don't know exactly. Oh my gosh, I think I deleted everything. Yikes. Let me see if I can go back. Yeah, it looks like I deleted everything. Oh, that makes me so sad. Who asked me that question and made me delete all this? No, I'm kidding. I have this chart over here. So yeah, this is where the top down was done. That's why I have two charts, just in case I make a mistake on one. They usually overlap sometimes with the top down and stuff. But yeah, yeah, this was it. So yeah, look at how I mentioned that we can come back to this area here. Come back to this area. Now we want to watch for this pattern potentially forming here, because we got one area here, right here. We have another area here, but this would have to take the high first and then come back into the area to give us that other area, and then potentially go long up into some of these areas here, or maybe even just to this imbalance. So this is just what you want to be careful of. This is not really a, we're not really finding, like this low right here is not really finding support from like a particular area that's fresh or unmitigated. So this can just have like a pseudo push up to tap into an area and go, or it can just continue to fall, as we mentioned, from like up here. So yeah, but I'm glad this is helping people, and I want to continue to be able to help people. Yo, there is a private channel I can join already. I've got more info from you than the last 18 months. So I do have this Telegram right now that you guys can join. The Telegram link is in the bio, well, in the description of this particular video. If you just expand it, you'll see the Telegram link there, and it'll bring you to here, I believe. Yeah, it'll bring you to here. So I have the Telegram. Again, we are working on the Discord because I know people use Telegram for communication, and if there's so many notifications being sent out, it can be annoying. So you could actually, if you join the group, you could actually just mute the notifications or disable the sound or whatever it is, temporarily snooze it, whatever you want to do. You can do it with that, because I send out like, you know, quite a bit of stuff in here, and it's just essentially like little teachable moments that I'm sending to people as well. I'm not necessarily sending signals or anything, but I'm sending like why price rejected from where it rejected, and then where you could potentially find some support on, whether it's here or whether it's a retest of the imbalance down here. You know, like I'm saying that stuff directly to people, like letting them know, okay, look, I said there was trendline liquidity here, so that's why we were running the low. And did we end up running the low? Yeah, you see? Bam. We kept running all the way back down to this area here. And I don't know how the rest of it really played out. Oh, we mentioned that this liquidity grab happened and price pushed up immediately. So if you look, I don't even know what I just did. I did something here. Oh, if you look here, there's a liquidity grab down, but look behind where it grabbed this S&D behind it. So when we saw the tap into this S&D and we saw this push up above and it ate this high, we knew that it was coming back down to the range of this area, and we don't care about the wick because that was manipulation. Tapped into the area and left up to where? This area. So this was a long into a short. And this is just from the group that we have here. And we're trying to create a Discord so it's not as spammy and stuff like that for people. But it's definitely going to create like you know, so much progress and success for people. That's why we already have a testimony section here. We already have a profit section here, because I know for a fact that this teaching is going to change people's lives and cause all the people hiding behind Zooms to have to come out. Look, you see what I'm saying about spamming? You guys see the chat? Cheap Tinder. Tinder's already free. What do you need a cheap Tinder for? Let me go in and just get rid of this. John, actually, John, you have moderator control. You could actually just remove this stuff here. So I don't have to go back and overlap with the sound and stuff. Let me move this out. It was this imbalance here that I had mentioned, guys, so just be careful of it right here. Tap there and go. Yeah, exactly. Naked women. You know what's so interesting? Let me show you guys this real quick. Where is it? Oh wow, you guys, I guess you guys really like what you see. That's 14 followers already today. That's good. Thank you for that. Let me show you guys this. Right here, analytics. My audience, let's see. Let me show you guys this. Look at this. 94% of my viewers are men. The ladies don't love me at all. What's happening? No, I'm kidding. But yeah, 94% of my viewers are male. And only 6% of the views come from women. And I promise you, because of like how amazing and fantastic women can be, I promise you that the women in the chat could wipe the floor with the men. Like, they're just so meticulous about things. And like, I promise you, it's be the day of Armageddon if we had to trade against most of the women, because they're just like so much attention to detail. And I'm telling you, there's one girl here now. She would scrape the floor with me. Armani, she would scrape the floor with me. And she's gonna probably be like the best trader in the world. But this is what this particular this particular teaching can afford you. So look, we have this area above. We also have this S&D here. This is a hidden S&D above, so price could very well tap into this area and go, but this could be sufficient enough to just put in another low if it did. That's if we were going to continue short. But this is why we trade and we watch the algorithm and let the algorithm show us exactly what it is that it's doing. Because if it shows us that, then we're not making any decisions based on what we think. Because I always say, trade what you see, not what you think. And I stole that from the trader Jessica Lanes. She's a pretty good trader as well, with retail concepts, but I stole that from her. Trade what you see, not what you think. And I'm not endorsing her. I don't know. Like, people are great in hindsight, but forward motion, you really don't know what people are doing. So that's a real thing, by the way. So I'm not endorsing her. I'm just saying that this is what she says, which all of them have like great sayings and stuff like that. But you gotta be a little skeptical of that, because it's like those millionaire motivational videos. The sacrifice. You got to pave the pavement. You got to make sacrifices that when you come back in the future, you're going to look back and be like, yeah, it was worth it. It was great. And then they tell you to go to work and put in 16 hours on a shift and then go back home and listen to the video again to pump you up for the next day. No, those millionaire videos are garbage. Those videos should only be displayed if they're showing you exactly how to become a millionaire. Other than that, they're useless. So Naz, you have mentioned Q-Check Naz 100. It went up as you analyze, and it filled the gap. So I didn't know there was a gap, but I remember I did analyze it for you. Look at this. So this is the analysis here. I told him that we could either come to this area here or this area here. So we tapped into the area. We formed the little candlestick structure that we like to see. And then we pushed up out of the area. Look at where we're at now. All the way up here. from this particular area that we said we can get a bounce from later on in the day. I think this was yesterday, it might have been. But just within that area alone. So yeah, I'll analyze it again. But it looks like we still have some areas here from the top down that we did. Here. Yeah, see there's still some areas within this top down, but what you want to consider if this is going to continue bullish, tapped into the zone, came up. You see we got the double bottom on the imbalance and we left. Make sure you see that at the areas of interest that you're trading from. So we took out this high. We ran this high. We want to look at the area that's responsible for running the high as well as the range of the area. So that's here. So this is the last high, this is the last low. We just put in a new high. So we're between this high and this low here. So we look like, it looks like we're coming back around to somewhere within this region here. Somewhere within this region. Let me take the whole move here. Yeah, we could be coming back to tap within this area. Let me actually just look at what happened in here before I let you guys know that. We got a test of this area when we broke above. Yeah, we already got a test of this area. We got to tap into this area. This is unmitigated down here. So we could get a tap within this area on NAS if we're coming down. This could actually be the area that we begin to trade higher from. Did we get a test? Oh, so this is the overall schematic here. This is the overall schematic here. You see how we said we like to get that in place? And then we want to see price trade out of it and come back and test it and then go. So if we're going to continue bullish to the top side, price would end up tucking back into this area and then leaving. But if it continues bullish like it did here, you see how we had this area here? We pushed up bullish. We ran this high. And then we flipped bearish. So the area that we may potentially be coming back to is this area here overall. We could be looking to test this, but we have quite a ways to get up there. So what we may end up doing is having a tap within this area, coming back to here and then trading higher. And then if you open up the schematic a little more, you begin to see that it looks like a larger 4-hour setup like this. So then as we continue to go up, we come back and possibly test this area now. And then we put in more highs. That's if price continues to trade higher. That's how it would be moving on the higher time frames. So again, like we said, we could see all time frames from the same time frame because time is fractal. So if you're looking for a more immediate move, then no, it's cool if you have a bunch of questions. I love that people ask questions. I love that people want me to look at charts. I'm completely okay with that. Trust me, it's no issue at all asking questions. So this is a low that this is a 15-minute low. So this is an important low. But then we have this area above here. We already mitigated this S&D zone with this. So this is left unmitigated. We tap into this area. We push above it. We tap into the center of this hidden S&D right here. We tap, we reject out. Put in this low, came back up. We ran the high. But what happened first here? So we traded above the high, went into the low, and then we came back up. So this area potentially is already mitigated just because it did that. But then we tapped up into this area here. This area here that it left behind. So we might be trading higher to come up into these areas here. Because if you look right here, this was the tap of the area here. We tapped into this area, pulled back up. We have an S&D right above here. We have an S&D above here. If it gets rejected from here, then here. If it gets rejected from here, then that could potentially be the equal high that results in the run of the low or the run of the lows in this particular case. But we may still be able to get up into this area here. This is mitigated. This is mitigated. This one is not. This one is not. Yeah, this one isn't. So just be mindful that if we do make our way up above this high, we could potentially be going to this area here because there's a lack of mitigation. But sometimes you have it to where price comes to here. I know this is a 15-minute, so it could take some time to get here. But sometimes you might have right here. You might get this rejection first. Here, you might have this come up to this. You might reject back into here. You might have it come here, reject back into here. Then you might have it come up here, reject here, create an equal high, run the low, come back in here, and then leave the whole area. You could potentially have that up within this area. But it looks like there's a potential for price to continue to push higher. So that's just what I'm seeing with NAS. And you can just follow that potentially and see we might really be going down if we run this low here. So we're within this range right now. This low here. We're within this range right now. So this is the top of the range. I don't really use this, but I know if it might be helpful for you. So this is the range that we're in here. And this is $126 pip range. So you just got to see what kind of happens within here, the story of what it tells within here. And then that gives you the breakout, whether it's below or above. And that's how the NAS is looking. So look, we just got the top of this area. We want to see what it does there. If it doesn't give you a double top there on a smaller time frame, then it could potentially still be traveling to the areas further above. But you can correlate this chart. You can correlate the US 500 or the Russell 2000, is it? You can correlate that because they move hand in hand. This one has already moved 1,000 pips since it opened. This is the S&P, moves more than all of the other indices together. All the indices generally follow the S&P. So yeah, that's the top down for NAS. You're welcome for that. I know I spent quite a bit of time there. Let's go back to US 30, see what we have happening here. Yeah. So look, here was the entry. You see the manipulation down, then price shifts up and breaks the high. We tap back into the area that was manipulated, and we longed from that area to go up here. It's the same thing over and over and over again, and I want you guys to see it because it happens over and 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 over again. Like over and over and over. People think I'm a magician. No, over and over again. Remember what I said about this? I said we could potentially come up above this high. We can come back into this area and we might go long. I said that when this was consolidating here because I said here was the stab. But I had mentioned that we're not really in an area, like an important area. We're not really there. So I don't really see this pushing up to break the high. It can, not too sure. But I did see that we were gearing up to come back up to this area up here. And it was because the rules and the principles within this here, within this same pattern that I try to get you guys to see, maybe on the 5 minute it looks cleaner. Same pattern that I try to get you guys to see over and over again. I'm like a mother repeating things over and over again. Same pattern here within an area of interest here. So this is where the higher time frames become pretty good to, take a look at, because if you guys look at this on the 5 minute, it's fine to take a peek if you want to at them. But if you look at this here, look, we went above this area here. So we dropped down. We ran the high of this area. Price never came back up. So what do? We look for price to return back into the range of the area. Look at the tap that we get. Beep, right there. And we trade higher. So we could potentially be looking to trade higher if we go up above this here. But it's the same thing that's on NAS, areas above that we have, US 500. Well, this actually looks like it's going up. It looks like it's still pushing up. So if this grabs the high, you could potentially have it to where the rest of everything goes up above their areas too. But look at this. Forget the high. Because as we said, manipulation trades back down within the range of the area. Don't care about that. Forget the high. Look, we tap here. Go. Where do we go down to? An imbalance here. And all it takes is just spotting this stuff real fast in real time. I hate this area because I feel like when I'm trying to center it exactly, my hand starts cramping up and I'm like, not now. I need to get it perfect. Because I'm a little bit of a perfectionist. So look, we short from here. We short from this area. And we come all the way down to this area here. And we get here in 3 minutes after noticing the tap there. But then we get a tap here. And what do we get? We get the structure to know that we're going to flip the high. We get the candlestick pattern to know that we're flipping above. But what is it that we talk about? We put in this low, we put in this high, we put in this low, we get a run of the high, we tap back into the area, and then we go. And it's this simple over and over and over again. It doesn't always look the same, but it always happens the same way. And this is why I was telling, I think it was Taven, it might have been, I was telling them about the inside. You want to look at what's happening within here. You need rules for this. The rules is that we put in this low, we put in this high. We ran this low. And then we ran the high directly after. Manipulation, downside and upside. We tap back into a premium area and then we trade out of it. And that's all you ever need to know with trading. Just spot that. That's it. Nothing else. So look, we took this high here and I said we could be trading higher. Let's look at this here. Oh my gosh, these delivery people are always ringing my doorbell. Look at that. What did we do? We took this high too. I said if we were taking the high on S&P 500, then we're probably going to take the high here. I don't know who this is. Hold on, let me check. Sorry, that was my obnoxious kid. So look, NAS, we still didn't get up above. But we took the recent high that was here. So now what we want to look for is this testing the candlestick pattern that it left for us here? Is this just a test of it to trade higher up into this area? Or are we running... Because we will eventually, but are we running the trend line low? So is it going to be like this? We could tap into this little area here. This little area here. Because this resulted in the structural break above here. Or maybe there's an imbalance within here that price is going to... Let me zoom in because I know I'm seeing it from like that very tiny portion of it, but you guys are probably not really seeing it well. But yeah, this area here, you know, we can tap up into this, you know, potentially get a tap, and it looks like we already got a tap on the top of it, but we can tap into the middle of this and then continue up as well. But this only happened here. This push up only happened because of this imbalance below. So we could even come down to the tip of this, which would also be a second touch of the imbalance, and then potentially trade higher. So this is an area that you want to watch out for if you're in NAS, by the way. And I'm supposed to be doing US 30. Sorry, guys. Get back to the 30. Yeah, okay. So you see how this candlestick pattern here gave us a new high after tapping into an area to the left. Now, granted, we mentioned that we didn't think that this area was strong enough to give us a high. but we said, we'll see. We saw this being created down here on the entry. So we were like, oh, wait, okay, no, this looks like that pattern that we usually see. This looks like it could be heading to the top side. And what did we get? From this area here going all the way up to here. At first, we thought we were just rejecting from here. So that was our bias to come up. But we pushed all the way up and came back in and got rejected in this area. Not only did we get rejected in this area right here. You guys see this? So we come down here, we come back up here, we come down here, and then we end up running the high here. Running the high here. Look, we ran the high right there. We came back into the area here. Actually, no, wait, let me make sure I'm not lying, because people be lying on God's internet, and I'm not trying to be that person at all. Let's see. So we put in the low. We get a run up the high. Let me see if this candle actually, I want to see if it went up above this high first and then came back below the low. Because sometimes it'll mitigate an area just within the same candle. So let me look. Whoop, there we go. Mitigate it, came back into the center of it, and then left. So that's what we got within that area. So this here was only a second touch within the area. So I told you the first area is the scalp up. This, if it returns to the area a second time, that becomes your longer move. But when it returns a second time, what you need is not a tap on the second time. You need a double bottom for the second time. So the first entry was actually here. This one here stops behind the zone, and you're looking to potentially take it to, like the next structural area. Usually I say utilize the imbalance or the S&D. So that's the tap. Quick tap. You're out. Then we get the second entry back into here. But remember, we're not only buying because we saw this push back into the area. We're going to buy because the same thing that we saw here for us to get involved is the same thing that we see here, this entire thing here. Sorry. Why is this not, I'm always, maybe I'm getting like carpal tunnel or something. I don't know. My clicks don't be clicking. The math be mathing, but the clicks don't be clicking. So we get this area here, right here. And we end up making the pattern within the area. But within this area here where your second entry is, look for the double bottom. And it's not really a double bottom. What it is the same thing that happened here. You see this here? The same thing that happened here, like this, or that happens everywhere. We're looking for it to happen around our entry. So what do we get? We come down from here. We make our way back up here. We make our way down here. We run the high. We tap back into the area, and then we long. So now you not only had this one entry across the way as a scalp, now you have the longer move here. Because we returned a second time and gave you that. So now with this move, we're expecting this move to either come here or to run all the highs, because once it runs this high, these highs are going to be ran as well because all of this is mitigated. So that's how you get the second entry. And now you end up walking away with 31 pips here, 52 pips here, 83 pips on the day within 24 minutes. 83 pips within 24 minutes. Now, if this was if this was the regular, like the low lot size that I'm using, this is, I mean, for both trades, this is over $8,000 for my lowest lot size. This setup, over $8,000 with a 6 pip stop loss. So I'm only risking 600 on this trade, and with an 11 pip stop loss where I'm only risking 1,000, but I'm risking 1,000 to get 3,100, and I'm risking 600 to get 5,200. So the risk is still captured in all of this, but it's just made small. And it's because you're using structural areas where you know this is where the banks are hiding their stop loss. This is actually a 12 pip stop loss. Don't want to lie about that to you guys. Next thing you know, somebody make a whole YouTube video about me. Look at him. He said it was 10 pips or 11 pips and now it's 12. You know, like people make videos for like the craziest things. You guys ever saw those ASMR videos? They'd be like, and they get like millions of views on it. Just up millions of views from that. Out of this world, man. But this is essentially like how all of it is taught. Find the area of interest. Understand what's going on in structure. Find your setup within that area of interest. And that's all you want. First entry is a scalp. Second entry, you find a double bottom or a double top on it, and then you take it to that direction. And that's it. Over and over and over and over and over. It happens like clockwork, over and over again. So look, this tapped into this area here. And this is how you can compound your trades too. This area here was responsible for breaking this structure and this above. So you want to look at the area that's responsible for the structural break. That's this in particular. So right here, forget the wick. We tap into the area and we trade higher. We trade higher. So this is your scalp here. Bam, up to the S&D, 21 pips. But now you're waiting for price to come back and give you another entry on a test of this manipulation. A lot of the times I mentioned that if the wick goes below the following wick and pushes back up, that's a manipulation and you don't want to consider that. So now what do? We take this to this, and when price trades above it, we consider this area potentially being the area that price taps into and goes long. And what do we get? We get that long. So we get the first scalp up. We get the first scalp up that's here. And then we get the long entry here to take us up to where it went here. But then look, we might be breaking structure to the downside. Maybe with this wick. So with this wick coming as low as it did, we could potentially expect price to tap back up into either this area or here. Sorry, why is this here? What is this for? Oh, I have this stupid thing on. Yeah. All right, bye now. Now we potentially get price to tap into either here, where it just tapped, or here, further up. So we'll see if we get a tap into this and a rejection away from this and possibly back down. But this move up could have been from this minor imbalance in here. And then we got, no, this could be taken to high because we got a tap on this imbalance and it pushed up, but then we got a double tap on it again. So we have to make sure that this isn't the candlestick pattern that we usually see to trade us higher. So we would actually want this to be broken to give us some idea that it could potentially come back down. So again, remember, it's either the touch of this. It could be the touch of this, because look at this liquidity grab candle. Right here. Pushed up above the wick, traded below it. But then we just got the test of these three candles. So let's see what it does. Does it take you up after the test, or does it short and run the lows? And we have a run of the low. So then this rejection here is the rejection that we were looking for to potentially run the lows. And if this runs this low, we have to see what it does in this area, because this could just be running the low to come back to the same imbalance area, testing the imbalance again, and then trading higher. The same way that we've been doing the entire time this morning. Taps into the imbalance here, pushes up, tests the imbalance, pushes further. Test the area that's created here with this, pushes further. So now what are we potentially looking for? Potentially an area or a test back into somewhere here. And if we get the test back into here, we could trade higher, but if we come through this area, then we're dropping. Because at that point, it would be violating major swing points on this time frame. Because these are major swing points here. Here, 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 here. So none of the lows were violated as of yet. All of these lows are still intact. So you essentially want to wait till one of the major swing points are ran. And if that's ran, then that gives you an indication that price is going to go bearish out of this whole area. Look like a little shank to stab somebody with. But yeah, that's how you know that price is going to go bearish out of the area. This is intermediary structure, smaller time frame structure. So with all of this, this can easily reverse. This can easily be broken. You know, like we don't really test our longer trades off of that. Within this area, these are just like little scalps and stuff that you could potentially look to gain some opportunity in. So I'm wondering, you have this hidden S&D here. Here, let's see what price does with that. Could continue through. Could give us another tap into this one, which would be a double bottom into this area that it already tapped into. And then you would expect for price to give you a double bottom somewhere within here in order to take you back up if we were running the high. So you see how double bottom is a term that's used in retail concepts. But if they have rules to it, they could be way more beneficial than trying to get you to look for double bottoms and double tops. Now you're looking for structure, then you're looking for zones, and then you're looking for the double bottom or the double top maybe. You know, within that area, you're not just trading them because you see them all across the board. So yeah, what do you think about setting up a limit at the top black line? So it's interesting that you mentioned that. This is why I don't use limit orders at all, because with limits, I mean, I get it, you know, limits, you know, they help with the slippage, but I don't use limits because price is tapping into a particular area. If I had put a limit here and I put my stops behind here, or even if my stops were behind the zone up here, my stop loss still got hit if I put a limit there. That's why when it gets there, I want to see what is it doing here. Do something for me here that shows me that you want to come down. Do something for me. Nothing made her dance here. So she kept climbing. Little cha-cha slide through here, faked you out, made you think it was an equal high. Nope, yeet. Kept going. And I told you within the equal high, you want an equal high here. Yes. You want both highs, you know, close in the range of each other, even if one was higher than the other. You want both close in the area of each other. But within this right leg here, or right arm, or whatever it's called, you want an equal high to happen within here as well. And then that gives you some indication that the equal high is going down. Like, let me see if I could find. So here, within here, you have this high put in right here. Then you have this high put in. But then you still have price just giving you some sideways shift from this area. But all of this still gives you some indication that we're potentially facing some resistance. So we could go back down, tap into an area, and then continue up. But if you look, there was this equal high here. Sorry, there was this equal high here. But look, when price traded up to here, it gave you this equal high and it gave you this equal high. So now we have 3 almost equal highs. But it's not only 3 almost equal highs that we have, it's actually structure. Because look at this. The candlestick pattern that we like to see is present. Even if you use the larger structural one, the candlestick pattern is here that we like to see. So because it's here and we like to see it, it's what we like to see. We're expecting the runs of the lows that facilitated this area for us. And we got a run of every single low that facilitated the area. From this here, we ran every single low along this trend line. We ran it, tapped into here, and then left. And this is what I was talking about in terms of trend lines. Yeah, there's people that use them and some of them are profitable, but they're essentially just a storage of liquidity, essentially, that price ends up just running later. So, you know, like that's just something that you guys want to pay attention to. With the limit, again, I'm not setting a limit here because I want to see what price does within this area before I get involved. So you see we just had a run of this low here. We could have a retracement back up into this area and then a continuation down. And then this would essentially be Wyckoff. And I say that this would be Wyckoff because look at this. Let me just delete all of this, maybe to here. Yeah. This could essentially be Wyckoff because what would we have if this was? We have the selling climax, the automatic rally, the secondary test, the sign of weakness. We have, this could be the UT or this could be the UT within the area. Then we have a UTAD. And then if we put in another sign of weakness, the other sign of weakness actually usually comes and runs the low of the AR. So we could run the low of the AR coming down into here. We can come back into this area, and then that's where the final short is within this area. And then if you scroll out, you'll see, according to, you know, the things that we like to see, of course. You'll see price flip below this, come back into this area, and then leave. And what is that? The candlestick setup that we usually have. So this is how you anticipate those moves forward. Monty, can you just block this person maybe from the chat or something like that? I don't know. I don't want any sex, okay? Jeez, get out of here. Yeah. So I don't know why these spam bots. Hey, bro, I had to leave the office, so I don't know if you answered my question earlier. Oh yes, I did. I did answer the question. I believe it was wait. Oh no, I didn't. I didn't see this. Maybe it was this question. Was it the break? Oh no. I already got to the break. It was here. Okay, my bad. At 29,800 got me because with that close I was so sure we were going lower, and the higher low at 30,151, but the price just left to go up. Is there something that I missed? So where was that again? At 29,800. 29,800. That's what time frame is that? The hourly time frame, I believe you said. Oh, you're talking about down here. Down here, you thought that with down here it was going to continue short. Was sure the market was going, but the price left me to go up. Is that just the market being the market, or did I miss something? So this was essentially the pattern that I usually teach on the channel with here. This pattern and the rules that are laid out for this particular pattern. So you're looking for this. This looks like it came up here. Actually, let me look and see. This looks weird. I see what you're saying. Just go down into the bottom of it and take a look. Okay, so here's where the different types of structures come into play. We put in this low. We come up, we put in this high. Since this is the hourly time frame, you want to see the larger swings, but you also want to consider candlestick structure. So this puts in a new low here. Then trades above, comes back in the area, comes back down here. So what we would do here, since this is the hourly time frame, I would be using candlestick structure in here. I wouldn't be trading from the hourly. I would more so be trading from this particular time frame, the 1 minute time frame. But if I saw that it was an hourly move, then I would understand that. But look, I talk about the V-shaped recoveries that people tend to see. You see this here? This is just a liquidity grab. This. So we're down here, we're making, this is a lower low, lower high, lower low, lower high, lower low, and then it just pushes you out of the area. So you're trying to figure out what exactly happened here, because price didn't trade above. It put in a low and put in a lower low. But if you look within here, down within this area here, we actually have the same issue where we look like we're making the movements in price Within here, we get a lower high, we come into the area, and then we leave. But this is why I also teach candlestick structure, because candlestick structure would have gotten you into this trade if the intermediary structure didn't. Right here. So we begin to make our ascension down into the area. When we get to the area, we're putting in a series of lower lows, lower highs. We run this high. We trade back into the range of it, and then we leave. But when this happens, we need to make sure on the hourly, this is happening in an area of interest to the left side. So let me actually check and see what is this? 29,700. Let's see if there's any area back here at 29,700. So that's here. We have this gap in here. We have this candle that pushed down and pulled up. And look, price never came back to mitigate the area. So now this is a likely area to be mitigated because when price traded above, it never came back to touch it. Just like the area that you were faked out on, price never came back to touch that area until later on. So all you do is take this area here, you might base your entry there. You might put a stop loss there. Dang, this thing is scrolling forever. So look at this. You get a tap on the beginning of the area, or is this the middle of the area? This might be the middle of the area. But this liquidity grab down is into the wick of the candle that's over there. So now it becomes that, oh, sorry, I don't know what happened there. My bad. Now it becomes that this wick was manipulation down, and they left this hidden S&D zone here. So now the actual entry is here at the hidden S&D zone. I don't know what this spam thing. Let me see if I can go and block this this particular page. Let me just report them. Unwanted spam. Where is Armani? Can you comment in the chat? As well as Akeem, comment on YouTube, so I can just give you guys a moderator role. Yeah, because these things, and this is what I'm talking about in terms of the Discord. Like, this will happen over and over again in a Discord if there aren't those tiers. So that's essentially why, like, we have to switch up the model. It's not going to be the same way we wanted it to be, but we definitely had to switch it. So look, this tapped into the hidden S&D to the left. If you're still here, Alfredo, this tapped into the hidden S&D to the left. So the hidden S&D was You know ICT. No, I watched like maybe two of his videos. I know he knows what he's talking about, but because of like the little tangents and sometimes he goes on, it's really difficult to like be able to like keep up with some of it because he goes onto his little rants and stuff. But he definitely knows what he's talking about. I know that for a fact. Like he knows what he's talking about. He understands the algorithm. But some people can't just really keep up with the rants and stuff. So but he's good at what he does. Yes, he is. Yeah, I'm familiar with the candlestick structure, but I always believe that candlestick structure is most valid on the 1 hour and above. Yeah, it is valid it is more valid on the higher time frames. But also remember, we took this area, this liquidity grab towards the left. This is from the same time frame you're trading from, the hourly. So I would find an area of interest first. We tap into the area of interest. We go to the lower time frames. Now that we're in the area of interest, what are we looking for? The same type of setup to happen here. So now that we're in our area, we find the liquidity grab down. This is the same liquidity grab within this area. We have price shift up above this high, this last high that was put in. We get a tap into this area here. We put our stops right behind here, and then we look for the hourly move that we find that we found this particular thing on, and whether we think it's coming up to the imbalance, whether we think it's just going to run the high or whatever it is, we found the area to the left already. We found this area on the charts. We found the hidden S&D, because I told you there's always these hidden S&Ds that's around that makes us think that price is going to run the low because we pay attention to these wicks. It's like, oh yeah, if it goes below the wick, then, or it might go down and fill the wick. Nope, yeet, hit the middle of it and then just went right up to it. But if you saw it on your time frame that you trade on, now you just go to the lower time frame to find the entry, and you have a 32 pip stop, and now you're potentially targeting some area above here from finding your entry on the 1 minute reflective of the 1 hour. And look, then you just climb, and it becomes a smaller time frame move, a smaller time frame entry with a longer time frame move. And now you're risking, or I would be risking, $3,900 to make $94,000. And that's how the hourly would play out for me if I was forecasting my trades from, beforehand, like from the higher time frames. But because I can see things in every time frame, I really don't, care much about the higher time frames, because I can see everything on the 1 minute, or most things I could see on the 1 minute. So yeah. Look, we might be getting that formation of the candlestick pattern we like to see here. We might be getting that. But look, we almost got it here. It looks like we almost got it here. So what happened with it? And we tapped into this S&D and then started to trade back above. We were actually supposed to run the low first and then trade above. So because this low was left intact, then we're still looking for it to continue, because a low wasn't violated on this time frame. We have to have a violation of the low first, and then we pull back into the area and then go. So that's usually the requirements that I have for even utilizing a bullish or bearish flip. So hidden S&D zones are basically unmitigated areas. Yes, that's all they are, unmitigated areas. But they're hidden. They're areas that obviously it's not like, look, this here, this wick here, this is a hidden S&D zone. So this may go up and flip the high soon because of this area here. But it might just be going to tap into this area. If it doesn't hold at this area, it could flip the high. But this is essentially it. This one wick here, this long wick that you see, Manipulation. Because look, we have price tap right back into it and go. All this becomes is an S&D zone here. And all we're getting is our candlestick pattern inside of the S&D zone. The hidden S&D zone. That's all we're getting within here is this. And yeah, this could push up above here, come back into the area to test it and leave. And then go up and potentially run the high. That could possibly happen. Or this could just go straight up and run the high. But we had a hidden zone and we watched this happen within our hidden zone. So within the hidden zone, they're actually making their next move in here. Meanwhile, you believe, not you, but retail traders, meanwhile, we believe that this is just ranging. This is consolidation. We think that this is consolidation. And guess who looks like the clown? We do. Because it's not consolidation. I mean, it is consolidation, but it's not consolidation as in like ranging. We can't trade that. You should stay out of areas of consolidation, blah, blah, blah. No. Anybody who tells you that doesn't know what they're doing. There's no such thing. Consolidation tells us the story. We need consolidation to happen in order to tell us what the next direction is going to be. And I talk about the candlestick pattern happening within this S&D. If you don't believe me, here we go. We put in this low. We put in this high. We put in this low. We put in this high. We put in this low. We run this high with this candlestick. We run it. We come back into the area that we violated. We come back into this area. And then what do? We trade out. And what is it? In the hidden area that we have the candlestick structure that we like to see. And then if this continues to trade higher, or if it does trade higher, we could have it come back within the area to test the candlestick structure that we put here. We could test it and then leave and create another high. Potentially. If this area did not do its job, which I mentioned that we could come back up to this area earlier before all of this was, I think I had mentioned, remember it was here? I said that we got the tap here to go down, but price can return to the area a second time. So then it could be this candle that potentially was hit, which that's what it is this candle. So we have an imbalance between here. So watch it. This could be an imbalance tap only to trade higher. Or we can just run through it and come back down to the untested area here. Or we can just run through this area too if this is not the area that price wants to stop in. You know, like there's a bunch of possibilities with all these different things, all these different time frames, all like a bunch of different possibilities. And this is why I take time to teach live, because I know everybody else lollygags and chats and talks about all these different things, which I go into my tangents too. But then I give you any real information, real substance for you to take with you when they log off. Just like, yeah, that was a great chat. Join the mentorship. Okay. You know, like it's not really teaching you anything. Again, this teaching, I've never seen it anywhere ever in my life. And it's me teaching it. So yes, I get that it sounds biased, but I've never seen this anywhere in my life. Anywhere. Like nobody, you know, taught me this. Nobody like nothing at all. I've never seen this. I've seen some people teach some of these concepts standalone, but nothing as comprehensive as essentially, you know, what I teach here. Nothing as comprehensive. So this area, this push above was just that we hit this imbalance and had this push up. But what are we having here? What do we look like is going on here right now? I told you when we come up into an area of an equal high, we also want to see an equal high happen towards the right side of that area. But we want to watch this because this is an imbalance here. And this is the candlestick structure that we like to see just happen within the imbalance. So this gives a little more, like areas like this give a little more hesitancy for me to take a longer trade out because of that particular thing. Is the candlestick structure the engulfing or any relevant pattern? Tweezer tops, just confirming that I'm understanding correctly. So the candlestick pattern is essentially a series of highs and lows being created with just the wicks of the candles alone, or the bodies of the candles. But the pattern that I'm talking about is essentially that it has rules to it. It has to run a previous high and then tap back into the area and then go. So I call it candlestick structure, candlestick patterns, but it's usually that. Yes, you're correct. They give you motivational speeches, but most no substance. Yeah, exactly. It's nothing behind exactly what it is that's like the reason why price does this or why price does that. So you mentioned what an imbalance is. Let me just take you here. Remove some of this price action here. Yeah, that very well could be it. A third trend line touch and then likely be broken by the liquidity. Yeah, that could happen. But again, since we're scalping, like, a lot of the times those quick moves are the scalps, and then the longer move, we want to reassess what that possibly is, what could possibly be happening. We just want to reassess that. Let me actually... Yeah, all right. Slim is there. Okay, cool. Slim, I just made you a moderator just in case you have those spam stuff coming through, or anybody that gets on your nerves, you could remove them. No, I'm kidding. But yeah, I just made you a moderator just so you could help out with that. I hope that's okay, brother. But an imbalance is between three candles. Sorry. You have this candle, you have this candle, and you have this candle. With this candle here, it closes, this candle opens, and this candle goes engulfing up into this area. So you had some buys here that turned into sells, and you had some sells here that flipped and turned into buys. So between this wick here and this wick here, sorry, maybe I could find like a better way to... Let me just use this. Between this wick here and this wick here, there's this area, this gap between here. There's this wick and this wick, they're not touching from either side. So there's this gap in between here. This gap is called the imbalance, or inefficiency, or fair value gap, or IPA, whatever they want to call it. It's all the same thing, imbalance. So this is an imbalance. What we expect price to do oftentimes with these imbalances is for price to come back into this area, tap into the area, and then leave. Or it can just give us a quick reaction as a scalp, maybe a long-term move, whatever it is. So we take this entire area from this wick to this wick. Let me actually just do this. We take this area here and we're expecting price to tap back into this area and then give us a trade coming out of it. The first tap usually is a scalp. The second tap is the longer move. And by tap, I mean it taps into the area and pushes out. And that my bam button is up and running. And then we tap into the area and we push out. But then we can come back to the area a second time and then leave again. So I don't know if this imbalance was tapped. I didn't check it. So you see how we tap into this imbalance and we leave. We don't hit the 50% of this area at all. I don't know if we don't hit it at all. So we still have an imbalance within this area here that price could potentially tap onto, which would also be a second entry because this tapped into the imbalance, but it didn't hit the 50%. So price can come back down here and tap again into this area and then end up taking you up. So all you really do is you take this area here and this area here. And now you're expecting price to potentially tap in here and give you another move up. Where that move is going, it could potentially run the high, or it can just be coming back into another imbalance above or another zone above that's unmitigated before trading lower. So this is what an imbalance is. Its price moved quickly out of the area and it wasn't able to fill all of the buy orders pushing up. It wasn't able to fill it with the demand of or the supply, at least, of the sell orders coming out. So we got sell orders coming back to fill this imbalance, but we didn't get enough of it. We want at least 50% or even down into 90% before leaving. Because if you don't have a seller, then you don't have a buyer. If you don't have a buyer, you don't have a seller. So it's supply and demand, essentially. That's all the market runs on, is supply and demand. So if you look up here, we talked about, which candle was it? Was it this candle here? Or was it this candle here? Oh no, it was this one. I'm tripping. So we talked about getting the equal high, but we want to see an equal high happen on one side of the high. Right here. We have the equal high, but we want to see an equal high here created. And then price shifted away and tested that equal high. And then that's where the long is. I mean, the short, sorry, but the longer move. That's where the longer move potentially heads to. So if you see this as it happens, I mentioned this when price tapped here. So you want to see an equal high in this area and then price short out of the area. But I went to obviously explaining something. So you got this. You got to tap up into this area. You got to shift away. You got a tap back up into the area again, and then we made an equal high around the entry. So then we left. We ran the first low of the equal high, but then we tapped back into the region of the equal high, and then now what? We run the second low. And where do we tap? This imbalance again. But I want a further mitigation of the imbalance at least. You're welcome, brother. You're welcome. Again, guys, I have a Telegram group that you guys can join. And we usually just throw in different types of analysis, whether they actually happen or not. We just throw it all in just to make sure that everybody's aware of what's going on. So I have mentioned here that if you guys look at this is right here. Is this it? No, this isn't it. It was somewhere. Is it here? Nope, it's not here. Is it here? Nope, it's not here. But prior to sending this, prior to this happening here, I had sent a picture with the tap of this and a push up. But then I saw this equal high made within this supply area above. So I said, okay, this is an equal high being made. Not expecting that to push up anymore. It's an equal high. I'm expecting it to run the lows. So then I saw this trend line liquidity here. And I'm like, okay, wait, there's a trend line. We could potentially end up running the trend line lows. So after that, when we tapped to the trend line, at least, here was the result of it. Here we end up running the trend line lows all the way down into even this low here. But there was a second tap into the imbalance to the left, which gave us a double top, a double bottom here, or a double tap entry here. We got an area that we could trade from after price flipped above. Long here, stops behind here, and you're expecting price to make its way back up. And I don't remember exactly if price made its way back up. Oh yeah, it did. Made its way back up. We tapped into this area. We found a short coming out of this area to go down. So this is all on this particular, group here that we're just sharing a lot of this stuff. Again, we're creating the Discord. It's going to have all of that stuff in there, all of those, great elements to it. And I mean, it's going to be great. We're going to have the public chat, the profits area, this area here would more so be like all of the trades that I'm sending, the spamming that I'm doing, with different shifts in price and stuff. It's a 1 minute, so you could expect price to shift around. We'll have a trade talk section here, at least for the more experienced traders, or even like the people who are in a tiered membership, and they'll be able to, post into this chat if they're just asking, different things in regards to this setup or whatever it is. They could definitely do that. So, this is something that we're working on. This should be up and running by next week. Like I said, we'll have the tiers on it, so it would, definitely be the free chat if you want, and then whatever like the whatever it comes out to, like whatever the amount comes out to with like the monthly fee of the different things that we have to create within the Discord. I'll let you guys know of that as well, but we'll have the free area where everyone just chats, talks, and whatever. And then we'll also have the tiered version of it. It can definitely be helpful with that. So we'll get out of the Telegram. I know most people like the Telegram because how fluid it is to just easily pick up chat. You have to go through different channels of different things. But a lot of the times, since people communicate with other people on Telegram, it can kind of get a bit spammy at times. So it's not ideal right now. That's why we're working on the Discord. But there's this Telegram. It's linked in the description of this video, and you guys can click on it and just join. And whether it's the weekends, whether it's the weekdays, it doesn't matter. It's just, it could be 4 a.m., 5 a.m., whatever time you're trading. If somebody is up and they're seeing some type of analysis that you're seeing, cool, whatever, it's fine. It works that way too. So, we have that we're utilizing, and we'll be able to, start to have a less spammy environment. We'll have more opportunities to trade all throughout the night. I give higher time frame analysis, lower time frame analysis. It doesn't matter. Any time frame. It doesn't matter what time frame it is. I could find some type of analysis on it and watch it, just play out. So, or just chatting, just regular chatting. There'll be a bunch of different features. Let me Let me see. All right. Sorry, I was just sending that real quick. Yeah, so I'm trying to get our money to write in here, so I could also make her a moderator. So yeah, we'll have that, and it'll have all of this information, all of this great information. It'll have that as well. So we have this low put in. We have the run of this high. We come back into this area, and let's see if we make our way above it. Did we cross a low? No, we didn't cross the low of this S&D here. So we tapped into this area. We would need a run of this, high here in order to maybe tuck back into this area and potentially long from. Let me see. Yeah, he's so crazy. All right, let me, there we go. Yeah. All right, got you. So yeah, like it's the same rules over and over. Again, same thing over and 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 over again, over and over and over again. And again, if you learn this, you will never ever need anyone to trade again. Ever. You will never ever need anyone in your life to help you to trade again. You will never need to watch another trading video. Now, I still watch trading videos of other people teaching. Like I was watching TrackFX the other day, because I don't ever think that I've topped out in knowing enough. And there might be something very slight within their technique that I might be able to utilize for myself. But I still watch videos, even though I know that this, like my style of trading is all that in a bag of chips. You bring any other trader to me and we rival at it. We can trade for charity. We can be like, hey, we start with X amount and whatever we come up with, we trade for charity. And I will blow them out of the water because I know for a fact how sure my setup is. But I'm also not saying that I can't learn anything from them, because I can learn something else from their particular trading style. I don't doubt that at all. I definitely can. So, I'm not pompous or anything like that in that sense. Look, this tap right here was the test of this area here. The test of this area. That's the tap that you get. Hold on real quick, guys. Sorry, just checking on the kids. I wonder, is my latency too much? Let me see. Let me put my hand up. 1, 2, 3, 4. All right, 4 or 5 seconds. That's fine. Yeah. So we got the tap into this area and we pushed up above. Now look at this. This is the last high. This is the last low. Here, we tap into this area and what? We probably come up to this here. If not this, then up here. And if we make it past this, then we could potentially be trading higher because the areas up here are already mitigated. Are you in any trades at the moment? No, I usually just teach most times when I'm doing this, because teaching, you guys definitely need some undivided attention, or else the quality of the teaching won't be so great. If I was trading, obviously I'm paying attention to my money in the market. I want to make sure that it's not doing anything that is not supposed to. But look, you have this high here. We drop in this low. So we would have to come above this high if we were continuing higher. So we could be shorting. Possibility. And if you guys have anything else that you want me to look at, any other trades that you want me to look at, any other pairs, whatever it is, I trade everything, not just US 30, everything. And by trade, I mean that I could analyze anything. It doesn't matter what it is. It could be stocks, it could be Forex, it could be whatever it is. I have no respect of markets at all, so if you guys have anything, you could do an analysis on gold. So yeah, I had, did this a little earlier. It depends on what time frame on gold do you trade on, because it depends on that too. Let me just move this out the area. we got the point with all of this, guys. I think this was from the higher time frame. I have to go. Thank you for today. See you on Telegram. All right, man. See you. Thanks, Slim. Glad to see you. Always happy to see you here. You make my day every day. So yeah, we were saying that if we came up above this high here, we would have a pullback into this area and then a continuation above. But then there's still this hidden S&D down here, guys. Right here on the 15-minute. And if you're late to the stream, you could always just go back and look at the stuff that we teach throughout the stream. Look at if you had any streams that you like, it was a must that you went and watched. Let me show you guys. Right here. If there were streams that were a must for you guys to watch, it's certainly let me just put these in a Telegram real quick. This is the #1 stream that I would tell anybody to watch. Yeah, let me just add this into a Telegram group. So it's this one here. Yesterday's was like bomb.com. This one here, there was two that was back to back that was 3 hours. I think it was this one here, and there's one more, and this one here. So no respective order. I do the same thing all the time, every day. But this one here, this video, this 3 hours and 54 minutes. This video, along with this other video that was 3 hours and 45 minutes. This is, let me actually just see the day. June 17th. My June 17th and June 16th video. These two videos are the only videos, and I'm telling you guys, the only videos that you will ever need to be profitable, unless you don't understand candlestick structure. And if you don't understand candlestick structure, then it's one of these videos in here, the May 13th video. So that's May 9th. Let me see. Probably has, is it this? No, May 6th. I should have a high viewer count, actually. May 13th. Let me see. Yeah, so somewhere within this video, I was explaining what candlestick structure is. I was explaining little flips that I usually do, where you take price, stuff like that. Obviously, this chart was ugly in the beginning. My early videos, please, if you're going back to watch these, only go back and watch these. Do not watch my early videos. They are a disaster. Like these videos down here. You see why they're 54 views for a reason. 65, they're a disaster. I wasn't talking. I still understood all the things that I understood, but I wasn't, it was new. I was new to it. I wasn't even talking. Like the whole time I wasn't talking. You see how the green candles I started with? Talked about how you can partial at 10 pips, let the rest run, or you hit break even. None of that stuff. I don't even, say that stuff anymore because I'm so confident. But I was essentially still showing the direction of where price was going. So I had this candle up. I had this line up here, and then I put the line down. The arrows, and it was essentially just showing order flow, showing where price was going. So, with that, I was still doing what I do now, but I wasn't talking. And there was this one guy, I don't know where he's at. You see, John was here the whole time. Look, just supporting me. He's the only guy here. Then I give him moderation status, and I'm like, okay, you're my only supporter, 0 subscribers. You're on my channel and you didn't even subscribe. Who does that? Who watches a whole live and doesn't subscribe? By the way, if you guys want to continue to see the amazing content that we share every day, consider subscribing, liking this video. It's good for the algorithm, as well as turning on a notification bell, and it will certainly be able to bless your life. It would help you in like amazing ways if you did so. So we could have a run of this low here. A run of this high here. We could have a run of this high, and if you run this high, as I mentioned, if we run this high, then we'll dip back into this area, and we can dip anywhere into this area from, we can come back into here, but I think that we may end up coming back here, if I'm being honest. So we can come back into here. After running this high, we might tap up into this area above here. Yeah, we might tap up into this area above here after running this high. And once you get a tap into here, you could have a low established back in to run all of the trend line liquidity leading up to that area. And then you could have a tap back into this area and then a push back up. So you also have this little imbalance that's within here. You have this one. Well, you could probably use this. So it's either this area here that it probably rejects from, and then taps back into this area and then goes long, or it just rejects from this S&D that's here where it currently is in. But we should be going bearish back into this area here, and then we should be going long. Now, if we end up running this high here, then I'm only expecting it to come back like midway into here, and then we could be going longer. But I have it up until here. So we have to run these highs. We run the high, tap into this area that facilitates the pullback, takes us back into this area here, and then brings us back up. So we should essentially be going to, if we're trading gold being bullish, 833. Tap up into this area, but the first area that it could go above and begin to fall from is here. So that's this area right here, because this area gives it the break of structure to the top side, and this validates this being the low. So after we break the structure to the top side, we may end up coming to the area that facilitated the break in structure, but we also still have this hidden S&D down here. So this is what we have to consider before trading higher. So we actually might just come down to this low and then tap into it to get us above the high, because there's usually an area of interest that takes out the high for us. So yeah, we still have to go above this high, actually, now that I'm looking at it. You have this high, you have this low put in, you need another high put in, and then the low comes down and then takes you out of the area. So that's what you need for gold. Dave, is there a way of sending you a message on Telegram, please? Yeah, if you join the group right here, if you join the group right here and you go into the members section, at least here, you could actually just tap into, hey Armani, you can actually just tap into this area here. You know, click on that and then just, oh damn it, put my phone number out there. I don't care. But yeah, it just taps into that area there. So you can do that and just reach out to me, personal message me. I'm fine with it, no problem. And we can chat from there. But yeah, that's the analysis that I have on gold, and we'll just see if that actually plays out. Look at this. So you see how we had this tap, came up, tapped further into the area, went into the low, and then broke the high here. So we retrace down some. Let's see what happens within this area. Do we get a tap out of this imbalance? Do we get a tap within this imbalance to take us back up and deliver us to, you know, some of these areas above? It could very well just be this area here, because this is unmitigated here. This is an unmitigated area here. And we have one just directly above it. And then we have this, sorry. Yeah, this was already mitigated. So we still have this area above if price tries to make its way back up. But if it crosses this area, then there's a possibility that we're running the high. But you see how this is diverging now, or converging, whatever they call it. This is making lower highs, but this is also making higher lows. So lower highs mean prices going down, higher lows mean prices going up. So if that's the case, then, you know, like we start to think about or consider, you know, what could potentially be happening in this area. And it's essentially showing that it's gearing up for a strong breakout because both are converging together. Usually they go until they can't no more, and then you have like a heavy push up or a heavy push down when they're converging like this. And then people essentially end up using these like the little retail patterns. I need to stop saying little retail patterns. I don't want people to think I'm against retail traders, because I'm a retail trader too. And it has something like that. So they see this here. They use this pattern and they say, okay, price is bouncing up between these areas. You know, high, low, and it's coming closer and closer together with the highs and lows that it's making. So they usually, with retail traders, they'll have a high here and they'll be like, okay, sell here, and it's going to go out. And then there are other people who view the market and they're like, okay, if this taps in first and retest this area, you buy here and then you potentially sell out. So both people are viewing the markets in different ways, taking different trades. This guy is going to here for a quick scalp. This guy is going to here for a quick scalp. So we have a lot of activity happening within here. Then you have the conservative traders who want to see it come out of the area, tap back into the area and leave. And then you have the other people who want to see it drop out of the area, tap back into the area and go. So there's a lot of anticipation followed by a lot of volume that could potentially happen within this area because all of these different things that are here. Buy stops here, sell stops here, buy limits here, sell limits here, stop loss behind here to sell down into here, stop loss behind here to buy up into here. There's a lot of stuff happening within this area here because you see price converging. And one of these traders are right. Some are impulsive and are going to be wrong. Some are right and are going to walk away with some profit today. Some are going to blow their accounts. But nonetheless, this is all of the engagement in the market. This is how everybody's playing. Two there, two there, two there, two there. And they're playing with these patterns. And for other traders, they are essentially waiting for structure to show us what it's going to do. Because as far as structure is concerned, it's making higher highs. It's making higher lows, but it's also making lower highs as well. So both people are viewing the market and not really understanding what's actually happening. And this is where we're trying to make some sense of it. We'd end up being in the middle of the market. So we fell out of this S&D. After we failed to make a new high, we crashed through the S&D. So this S&D no longer matters. This doesn't matter. You still have this S&D above, and you still have this imbalance here below with this S&D down here. So you want to look at what price potentially does within this area in order to potentially run this liquidity here. This is trend line liquidity here. Some here, some extending even up here, going into down here. So this is where liquidity is resting. This is where our manipulation happened that popped our stops from back here. If we had stop losses behind there and we left. And we're essentially waiting for the involvement of the market within that setup. Let me see. Can we look at gold and CHF JPY? So I gave an analysis on gold here on the 15-minute. If you want to take a picture of this, you can. So let me see. Right here, I said that we were in this S&D zone and could get rejected out of it. But then we have a zone directly above. We could run this high and come back into this area. If we run this high, we could go to this zone to the left and then potentially come back down to this hidden S&D that's down here. And this is a trend line liquidity going across here. So you could expect that to be ran down below and then a huge push up off of this, potentially. But it still coincides with everything going on within our area. So it can go up to this area, it can come up to this, or it can just come straight down to this. But this is what we're working with in terms of a 15-minute analysis. Gold on the 1 and 5 minute. Wow. So on the 1 minute, on the 5 minute, we're within this 5 minute S&D zone here. And we're being rejected from it. On the 1 minute, we have a double top forming. We just broke the low of it. We could tap into this area, and that's where the short could begin. It might be a short to this area, or it could potentially be a short down into this imbalance here. And this could potentially give you a long up into this area, somewhere within this area, even if it's just a run of the high or up there. And then you can get a run out of this area to run down into here, down into this area here, somewhere through here. But that's long term. That's a higher time frame bias. Oh man, I'm sorry to hear that. I'll definitely give you a call, Craig, soon. Sorry to hear that, brother. We get older, we get a little more riskier sometimes, or things just don't work as much as they used to. Like I think it was like 2 months before I turned 30, I started getting acid issues. And I'm like, wow, they must hate me. But I started getting those issues. So yeah, we can probably come down to this S&D. But again, this is a small S&D. Could be easily broken. This could facilitate a tap back up and then break through it. Possibly come down to here. It's more volume within this area. come tap into this area and maybe go long from here. But if it runs the low of this area, then it's probably going to run all of the low of this trend line liquidity too. So see, we have equal lows around here. We have trend line liquidity along here, and then we have an unmitigated area below. So that's just where the bias is coming from. How do you decide what to trade at what time? So just trade the pairs that are operating during their normal business hours. New York is, our normal business hours are like what, 8 to 4, or 9 to 5, but it's usually 8 to 4. So our normal business hours being 8 to 4 Eastern Standard Time, that means that you can trade the US 30, the NASDAQ, S&P 500, USD JPY, GBP USD, Euro USD, XAU USD or Gold USD, XTI USD, everything paired with USD during that time. Anything paired with the Asian session, you want to trade the pairs of Japan, Hong Kong. They have indices, they have pairs that you can trade with. Oh, somebody had asked me CHF. Let me go back to it. What was it? CHF something? JPY. Yeah. What time frame for this? But yeah, you would just trade the pairs that are within their business session. So obviously within the Asian session, it's during the business time of Japan, China, all those countries that are Asian side. You would use that. And those pairs move more liquid within that session than any other pairs tied to, like Euro USD, GBP USD may move a bit slower during that session because those countries are not in their business hours. And ComCon Technical Services, you had mentioned, it was 1 and 5 for this as well. Okay. 1 and 5 is a bit difficult to, look at this here. So we're shorting on this. I don't know if you're shorting, but it looks like a short is taking place here. We have this high put in, low put in, high put in, low ran, retest of the area, and we could be running the lows of it, or we could just be coming back into the range of this area here to get a long out and potentially trade higher. But it looks like we're potentially shorting on this for the next couple of hours into like tomorrow. But you could get a pump up into here to tap into this area first, and then you can get the short out of here because you're in the middle of two areas, a low and a high. So you can wait until it gets up to here and potentially short from here. If you see that flip that I usually talk about on this channel. If you haven't, then you get a lot of videos to watch. Marlo Van Zyl, do you think NASDAQ will go up or down before market close? Ooh, before market close. What a loaded question. So we're still in that range? Look at that. We're still in that range. Isn't that crazy? Pro tip as well. Look at that. So we can come through the trend line liquidity. We took out two areas, came down into this area, tapped in. Do we have this area marked for something? Because I'm trying to figure out why it double tapped on it. I have no idea. But we had NAS going up to these areas up here. If you look, you have this little candlestick pattern that we talk about, or really structural pattern, which should take the high, which it just did, and potentially come back down into here and then trade higher if it wants to. So we talk about this candlestick pattern all the time. It's really just a bullish flip or a bearish flip if it's at the top side. I often talk about being able to place a square around this area and being able to take a short from it if you don't know how to potentially reprice yet. It could even come up to here above. It could even come up to 1230. I mean, this is 22 and 30. It's no real difference, but I did have this happening. This is within the video. I did do a full analysis on this where we had mentioned that we could potentially come up to some of these areas before and then take part in a short, or we could just run the high. But we had mentioned that these were areas above that we were potentially coming to. So yeah, that's Nez. You see this here? Look at this, guys. I mentioned that we have these traders who are choosing different areas to trade from and trying to figure out, you know, what the market is going to do. And for us, we could at least just utilize price and structure. You don't have to utilize these patterns and stuff. So the pattern didn't even get you to touch here, but the tap within our zone here got you to touch. And yeah, the tap was, the zone was back here, but you also had this other zone here. This zone here. And if we're not counting the wick because we view that as manipulation, it's this zone here. Tapped into the middle of it, gave us our candlestick pattern that we like to see within our zone, and then took us up where? To this area here. And that's why I had this here, because I said we still have an unmitigated area above. So we could probably be looking to go up to mitigate that area. And that's what we have. We also have this candlestick pattern here, which gives us some indication that we could potentially be running the highs. Potentially. But I mean, I think that these videos, at least, I put the videos in a Telegram, by the way, guys. These videos, at least, you could definitely, Ollie, I'll send you a private message. Eric, you're welcome. Oh, I think he's driving. He wasn't able to catch the stream, but you guys could, you know, join this group. We sent a couple of videos within here that could definitely, you know, help. I sent 4 videos here. I promise you, if you study these 4 videos, on the other side of studying and understanding the concepts in those 4 videos, you'll be profitable. It just depends on how long you take to study it and how much time you put in testing it. But I promise you, you'll be profitable with those 4 videos. Because that's the only things I ever needed to become profitable, was the concepts that I taught within that video. Look, and it looks like we're still making our way up here. But this is why you want to pay attention to when these are happening here. I gave you guys the rules to this. What did I say? I said that if we run this high, we can go bullish. But if we run this high here, if we run this high, since we put in this low and ran this high, we're looking for the retracement back into the area, and then we go. And look, we just double tapped within this region up here and got rejected out. So these have rules to them as well. You know, you're not just taking it because you see this pattern on the bottom side. You're looking to see if there was any shifting in price that happened in this entire area here. What happened? We put in a low, we ran the last high, we retraced back into the area, and then we left. It's the same thing over and over and over again. So it's in those videos. If you guys take time to just learn that stuff, I promise you guys would never need me again. You guys would never come back to this channel. You guys might unsubscribe because there may be too many notifications or whatever it is. Like, that's how efficient it is. You know, so you guys, if you take a look at that, like, it would definitely help you guys, like, immensely, greatly help you guys. You know, so I just want you guys to consider that. Yeah, let me see. And you guys could follow me on Instagram too. If you guys don't have Telegram, or if you guys want to reach out to me, or you guys can reach out to me on Instagram as well. And with Instagram, you guys can do the same thing. Send me charts, whatever it is. I'm fine with it too. My Instagram is Dave Teaches. You can add me on there, send me a message. Always reach out to you guys, or get back to you guys whenever. Look at this candlestick pattern happening here. You see the wick above here? Manipulation. After we traded below the wick, what happened? We tapped back into the hidden S&D and we traded away. And if you just spot that stuff in real time, it's so easy. So easy to catch this move here. And we teach that on stream. Like, we don't hide behind no mentorships or Zooms or anything like that. If I'm Zooming, I'm just chilling. Just chatting with people, very reserved, explaining certain things to them. Not as excitatory as I am during the morning, and we're just chilling and making money. But we're just chilling, so it may be a little less teaching, and I might be able to explain something to you in the manner in which you can grasp it. And that would kind of help. That's just the Zooms that I do, like sometimes during the weekends. I'm going to start offering more private Zooms, consultations, things like that. If people are not really understanding the stuff that's happening on stream, we can kind of catch you up to speed with that within the 1 hour consultations that I'm going to do. But we have the Discord that we're getting ready to drop next week. And the Discord would essentially, give you a lot of resources and stuff like that. You can click over and learn, and just be a place where we're all in a community and we're learning all together, at the same time. So, just, you have to be joking to unfollow you. How can any of us be so ungrateful to you? This is all because of you, Dave. What a blessing you are. Yeah, I mean, people may not like the chatting. Sometimes I know I go into little rants and I talk and chat, blah, 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 blah. What can you trade over the weekend? You can trade Bitcoin over the weekend, but only on brokers that allow you to trade Bitcoin. And usually the spreads are a lot higher, so it's best to trade on the exchanges. But if you are going to trade on a broker for Bitcoin, you can probably use Hugo's Way, or what's the other one? I think it's CoinX or Osprey. You could use those too. But you utilize that to trade on the weekend if you wanted to. But yeah, I mean, people might get tired of me, man. Who knows? I chat a lot. I talk a lot. My kids don't even listen to me because I talk so much. So, but yeah, I want everybody to be profitable. I want everybody to learn. I want everybody to understand the way that I do, what I see. Look, this is 24 pips down from the time that I said, yeah, we're going short from here. 24 pips. That could be a quick scalp. Bam. Right there. Quick scalp. Right within that. And then there could be another tap within this area, and then a shorting out of the area because the equal high results in a run of the lows. So you could essentially do that, guys. You could certainly, reach out to me. I'm always personable and willing to reach out to you when I have time, when I can. I mean, it's one of me, and it's a lot of people. I mean, I went from, what was it? When I went to Colombia, it was 83 subscribers. Now I have over 200 and something, almost 300. And there's people reaching out to me every day with their, testimonies and their questions and all that stuff, which I'm fine with. I love, but I just may not be able to get back to everybody within record time. But I promise you, it won't be like days going by and I'm not saying anything to you. Most times it's within the same day. As soon as I lay in bed at night, fingers start to go away and start to tap and respond to everybody and stuff. I have little moments where I can do that. So, and the people that I've been talking with, they've been pretty patient, as well, waiting for responses. So I'm thankful for that as well. But yeah, this is what I do all day, every day. So you guys could just reach out to me and I'll be more than happy to assist you guys. Look, I talk to you guys about imbalances a lot because imbalances are important, and I imbalance you guys to death. Imbalance, because you see how important it is. Look, you tap right into the imbalance. Let's say you get 22 pips. You get the first scalp of the imbalance up. Where do we go? Back up into the S&D that's right here, 24 pips. You get rejected from the S&D that's above at 24 pips. Now you're taking it back down either to this S&D or maybe even to this S&D. But if it happens to just keep going, sayonara, baby. But maybe it won't go. Maybe it'll come right back to this area here and then, you know, shift to the top side. That could be the possibility of what happens. So look, we have this high put in, we have this low put in, we have I like this low, but I don't like what it did. See, I like it here. It tapped into this area and pushed up. After running this high, it came down, tapped into this area, pushed up off of the tap of this area. So the first scalp is already gone. First scalp is already gone. Yeah, so this could still be coming down from this tap. But I gotta go, guys. You can reach out to me on Instagram, on Twitter, on Telegram, whatever it is, and you know, I'll be sure to get back to you guys in record time. We do this every single day at 10 a.m. to 12 p.m. Sometimes we'll go over, but join the chat. There's plenty of information in the chat, plenty of sauce in the chat for you guys to be able to learn from. We're gonna open a Discord soon, and then we'll be, you know, on our way with that. But I'm here every day from 10 a.m. to 12 or beyond. So make sure you guys like the video, subscribe, turn on notification bell, and I'll see you guys at the same time in the same place. Enjoy.